Good afternoon, my dear members and esteemed colleagues. So today we have a very unique session, probably which is being done for the first time in the Bangalore Institute for the year. The art of representation under the Income Tax Act. So for today we have excellent speakers who have come here to share their knowledge, expert knowledge on the topic. So I request Ishita Bhaumik, please, to come on the dais. And I also request C.A. Raghavendra to come on the dais to hand over a floral bouquet on behalf of the Bangalore branch of ICAI. Thank you, C.A. Raghavendra. Just a brief introduction about the speaker here. Ishita is a chartered accountant with a Big Four experience of more than 20 years in handling various corporate tax and regulatory matters across the industry. She has worked very closely with IT and ITES clientele for evaluation and proactive planning around the formation test for tax holiday units, business presence test, and advice for marketing entities in India. Restructuring involving spin-off in a tax-neutral manner, business modeling and contract structuring, inbound and outbound movement of personnel, IP migration strategies, and so on. Her area of specialization is in handling technology, media, and telecommunication industry, industry-specific issues, and consumer business-related issues. So of course, her strength is in representation before tax authorities, management of tax controversies before first and second appellate authorities, managing demand recovery and unlocking refunds, advisory and corporate restructuring. So with this very brief background, I would like to present before you Ishita Bhaumik. Over to you.
Very good afternoon, ladies and gentlemen. Am I audible? Thank you all for joining here. The topic given is very interesting and very fast. Art of representation. Actually, it is one art. How do you practice representation? Do you submit just the details, or you check what you are giving? Do you interpret it yourself, and do you put yourself in the shoes of the assessing officer and then evaluate whether you should do something or not do something? So it is a combination of all, right? And as a practitioners, we always check on few things, that what will happen if I submit certain things or if I interpret certain things in a particular way. So that gives us the background, then how to interpret or how to analyze, how to present something before the tax officers. Now this is what the topic what we'll cover today. I will cover the assessment related nuances and the first appellate authority, maybe up to the DRP level, and my co-speaker Ms. Tanmay, she will cover the appellate forum and the appeal matters. Okay, and feel free to ask questions towards the end of the session, or feel free to ask if you want me to pause in between. So assessment. When we talk about assessment, we start with the intimation. Now intimation under section 143(1) is the first and foremost documents which we get after filing the return. Nowadays, when we file the return and we upload it in the portal, we see a very fast response. Maybe within a month's time, the 143(1) is generated and provided. Now, what can be handled under 143(1)? Any arithmetical errors, obviously, automatically it will come up in 143(1). 143(1) intimation can check all your arithmetic errors, whether you have considered plus and minus everything correctly, or you have considered a number correctly. Few years back, like 2 years back, in the PAN of the in the TAN of the deductor, there was a number mismatch. And in last year, the PAN and TAN for the deductor has just interchanged. Immediately it came up in the intimation. So there are any arithmetical errors, any number errors, any PAN mismatch, it can automatically come into the 143(1). Incorrect claims apparent from any information in the return. There is a technology nowadays used by the tax authorities to assess the return or to verify the return whether it is correct or wrong. Now when you give in the return the balance sheet P&L, I'm talking about a company, when you are filling up the details for the balance sheet and P&L and you are giving the tax audit report, then if there is a mismatch between the two, automatically it pops up in the return saying that there is an error and that should not be considered. Right? So any kind of allowance or disallowance or exemption which is claimed, which is say not supported by the tax audit report or not there in your P&L, it automatically pops up as error and it says that there is an error, it should not be allowed. The good thing is the tax office then sends you a show cause or a communication saying that this is the difference, would you like to clarify? And we are given one opportunity to clarify whether it's a justified adjustment or unjustified. We have done certain adjustments in the return itself. So it is over and above that, you should not consider 1 second. So this incorrect claims, it pops up through the intimation only. Return filed beyond the due date. If there is a loss, automatically that loss, brought forward loss will be allowed, but that year's loss will not be allowed. So like that, whatever is the prima facie adjustment by in the return, that automatically gets done by this intimation. Inconsistencies in the return. The adjustments for inconsistencies is automatically picked up, as I said. Mismatch in the income details. So, I can give one example of last year, like there are certain entries which has been noted in the AIS. Certain dividends, probably the SFT was filed late or the forms were uploaded by the payer late. It was not there in the information what the assessee has submitted. So it was not accounted for, it was not considered in the return. Automatically it pops up the message saying that in the AIS certain entries are there. Have you considered this in your return of income? Now, so all AIS has to be matched with Form 16 and return of income. If there is an income mismatch, automatically this inconsistency and difference is identified and it is identified by the 143(1). You are given an opportunity to file a revised return and immediately you can consider that if it is a genuine adjustment. Sometimes what happens, you may have pushed one income from current year to next year as it is not income pertaining to current year. Those kind of adjustment you have to justify to the tax authorities why you have not considered that entry as an income for the current year. Adjustments for claims not substantiated with proper evidence or documentation. Sometimes you are probably claiming one particular expenditure in the return, but it is not supported in your tax audit report. Then that question also can come up, saying that in the tax audit report it is not there, but you are claiming that in the return, so please justify. Now, what are the adjustments which cannot be done in 143(1)? As I mentioned, the arithmetical inaccuracy, the TDS, the self-assessment tax, the credits, and whatever is prima facie coming from the financials and the tax audit report, those kind of adjustment can be done. But the adjustment to the income figure cannot be done otherwise, which requires a judgmental call. Can the tax officer just do an adjustment to the return of income and to the income which has been returned in the 143(1)? Say for example, for last 10 years there is an adjustment for provision for warranty in the orders. So officer knows that there will be an adjustment if he reopens the assessment, because that adjustment he does every year and you are on appeal at various forums. Can he do that adjustment? Every year that provision for warranty is there and he keeps on disallowing. He felt that he will not do a 142.1 and he will do that adjustment in 143.1 itself. Can he do? No, he cannot do. Anything which requires a judgmental call and assessment of the income cannot be done under 143.1. You see what the ITAC says? The assessing officer's jurisdiction under section 143.1 is limited on finding to determine tax payable or refund due on the basis of return of income and not otherwise. So what is evident from the face of the return, only that adjustment can be made, otherwise no. The change of character of income from one to the other is not permitted within the powers of section 143.1. This would be only done in regular assessment by issue of notice under section 143.2. So if you see that 143.1 is doing some kind of adjustment for the income figure, you can very well challenge it in the appellate forum and can challenge the validity of such intimation. Now, conditions when the adjustments can be considered null and void. If the intimation is not received by the assessee within 9 months from the end of the financial year in which the return is filed, you can challenge the validity. And if something is disallowed, you can challenge it and can say that it's null and void. If there is an invalid return and the defect has not been modified and there are some adjustments being made by 143.1, you can challenge, because the whatever communication they have to make it under 139.9, right? So 143.1 is a very limited, powers have been given under that section. Anything goes beyond that, you can challenge it in the appellate forum. Intimation post notice under section 143.2, that also you can challenge. The officer has to issue the intimation before the 143.2 notice for the assessment is issued. Intimation served without proper DIN or failure to quote a DIN. CBDT has issued a circular that every document issued by the tax authorities will have a exclusive DIN, so that you can trace that particular document. If the DIN is not mentioned, then that intimation is not a valid intimation. And sometimes it is not sent to the designated email ID and the address. Then also it can be challenged. It is not a valid intimation. Now, type of adjustments of the CPC intimation. 2 or 3 years back, there was a comment, by the finance minister saying that, it has been the regular process or the effort from the CBDT side saying that to reduce litigation. And after that, we have seen that the cases are not really picked up for detailed scrutiny assessment unless there are some reason for that. And the reason is typically mentioned in the beginning of the order, saying that why that particular case has been selected for scrutiny, like the high, the capital transaction or the infusion of capital or too many claims or some difference which they have noticed while checking the return. That is the reason when a particular return is selected for scrutiny. Otherwise, in the intimation, generally, through technology or otherwise, nowadays we see that all data is matched, and if the data is matched, no discrepancy noticed, it is not generally selected for scrutiny. Majorly we see that all general normal cases with a moderate income level, cases are not picked up for scrutiny unless there is particular reason which we just mentioned is picked up for scrutiny. So, to avoid any detailed scrutiny or to avoid questions through intimation, it is suggested that while filing the return, you take care of certain things. The first thing, reconcile all the income details. That's the basic stepping stone. You should reconcile income from all sources. AIS, Form 26AS and your books has to be matched. Has to be matched. If there is a difference, You should note down the difference. You should, mention the difference in the return itself. For example, you have earned a fee for your services, which is not the services are not completed, so you are not recognizing the fee in the current year. You are pushing the fee for the next year. So you are keeping it as your advance receipt from the customer. So the TDS also you will push for the next year. You have to mention that very categorically in the return of income, because your 26As shows that details that you have earned the fee, you have got a TDS. You should mention very categorically in the return of income. In the absence of that, definitely 100% you will get a question why you have not offered it to income. Similar thing will happen when next year you claim that TDS and bring back that income to your P&L. You will be asked that same question. So put it in the designated place in the return where the carry forward is required. Maintain consistency in the income recognition and disclosure. So always be consistent. Okay. One example, there is unrealized forex loss. Okay. So, and year 1 you have unrealized forex loss, year 2 you have unrealized forex gain. Now if you have claimed the forex loss in year 1, you should be offering the unrealized forex gain in the year 2, just to be on the consistent side. You can choose the other side also. You may choose not to claim the unrealized forex loss, and you can choose not to offer the forex gain in year 2 if you are consistent and your accounting principle or the principle what you follow for your tax accounting supports so. Now you cannot be year 1 you claim the loss, year 2 you don't offer the income. You cannot do so because tax office has this information. So if you are following a practice, make sure you follow that practice consistently on a year-on-year basis. Otherwise, definitely you will get a question. And then you have to justify why you have done so. There may be reason why you have done so, but there should be clear-cut reason, and under the Income Tax Act provisions or the judicial precedent supported, there should be a reason. Timely response to queries. Generally for intimation, they give maximum 7 to 10 days of time to answer the queries, and it is expected that you should write the queries, give the supporting data. If it is a query on TDS, self-assessment tax, income details, expenditure details, give those answers in a specified format in the portal within the time frame allowed. If you do not get, the tax office is not responsible for considering your response, and they have the right to pass the intimation without even considering your response. So the onus is on to you to justify or clarify the doubts and give that answer so that you get the rectified 143(1). Make sure the claims are being made in the correct format so that you get the deductions, and you consider professional review if you are in doubt. So that's about 143(1) intimation, and once the intimation is given or you are done with it, then probably you have a probability to get a scrutiny assessment of it. Scrutiny assessment is assessment which reviews the return on the documents in detail. So time limits for the issuance of the notice. As I said, like very few companies or very few SSCs nowadays get it. At least 50% of it has reduced, the assessment volume has reduced to a great extent. So section 143 notice is issued, and it must be issued within 3 months from the end of the financial year in which the return is filed. Nowadays, the CBDT is trying to make things faster. The conclusion of the assessment, the appeal process, for everything there is a timeline given, which is a very welcome change, right? As compared to what it was, say, 5 years back. And this is helping the assessors to a great extent to formulate their policies or implication of the transaction. Assessment must be completed within 12 months from the end of the assessment year. Assessment has to be completed. So many a times you see that there is the rush for, the information, people just, the tax office, they rush you through it, they give very less time, and that's the reason towards the end, because otherwise the assessment will be considered as null and void if it is not considered within a particular time frame. And keep in mind, if the department has evaluated all information, has not passed the order, and or does the order late in the time frame, like it is considered as null and void, can they do a reassessment? Can they do reassessment? Yes? Why? We'll come to reassessment, but if all materials are there in front of the officer and they have not done something, reassessment is a little tough zone for them. Okay? The law has got certain restrictions there where the reassessment may not be the avenue. Yeah? So it is very important for them to complete the assessment in the defined time frame. Accuracy in reporting. Ensure that whatever is asked, all questions are answered. It is very, very important that you do not conceal anything and you do not under-report, because at the end of the assessment, if there is any adjustment or if the officer feels that you have not disclosed certain things and if you conceal certain things, that can cause you penalty. There are penal provisions in the Act suggested for concealment and under-reporting. So, if you feel that he has asked you a question on ABCD point, whatever documents you have or whatever information you have, clearly represent and write it in a clear way so that you explain the nature of transaction and details about the transaction. Claiming the deductions, when the deductions have been claimed, you tell the nature how the deductions are claimed if the questions are asked. In the new regime, there are few deductions, so exemptions are not there. Deductions can only be the exemption, can only be the expenditure deductions, etc. So whatever is coming in the P&L, if you ask questions, you submit the answers very categorically, properly. Verification of the details. So, as I said, 26 says AIS and other software supporting documents and tax credits, everything has to be checked and then submitted. Avoid errors, double check the mathematical errors or omissions. Sometimes, for very large accounts, what happens is you download the data in a ledger dump and submit. And if you overlook in a sub-ledger or anything, the totals does not match or things like that gets unnoticed. So it is very important that if you are submitting, if he says that okay, rates and taxes, give me the full accounts details, do take that pain of checking each and every ledger or sub-ledger under that account, match it to the P&L account and see what is there. So match every account and make sure you are giving the total details what he is referring to as per the P&L account. Else, he will say that you have not reported it correctly, you have not explained correctly, you have suppressed the fact about 2 or 3 sub-ledgers. Avoid that mistake, check everything before you submit. Be consistent and be accurate. Ensure that computation aligns with the income declared in the return. Okay? Sometimes it's maybe a representation in the computation or in the return. You may be clubbing few figures and putting one particular figure together. He may not have the idea that what this figure consists of, right? You may have added up 1, 2, 3, 4, 5 and you put it there and he is not able to trace that. He will say that it's not allowed. So, when this kind of question is asked, or a step back, when you fill up the return of income, as far as possible you break it down and try to match it to the P&L or try to match it to the tax audit report. So first instance the question doesn't arise. If you cannot do so, the question arises, you give him the details so that he doesn't end up having another level of adjustment. So make sure you put yourself in the shoes of the assessing officer and see that what he is looking for, that details, and give that details as a what he is asking for. There was one return where the book depreciation and the IT depreciation difference was shown in one cell in the return of income. And the tax audit report is showing that under ICDS this is the adjustment. Tax officer has done that adjustment in the return of income. Is it justified? Not justified. Not justified, right? In the computation of income, the first entry which I do is add the book depreciation, claim the IT depreciation. So by adding and subtracting, you are anyway giving effect to only the difference, right? That difference is there in the tax audit report as ICDS adjustment. Obviously that question is asked. Now if that is not given in that particular way, then this adjustment is just not called for. And then now, the assessee has to go to appellate forum to explain this and can get it back. It was very unfortunate that this was not approved by the tax authorities, but this kind of things are happening, mistake. But while filing the return, if you apply mind and instead of the netted off figure, you give the gross and the, what you are adding and what you are subtracting separately, you can avoid this. So just put yourself in the shoes of the reader and see whether it makes sense. Maintain the documentation for the claims what you are claiming in the return. Say for example, there are capital asset purchased. There are assets capitalized towards the end of the year. How do you substantiate that the asset has been capitalized end of the year, asset has been put to use? The question is asked that they have noticed that this asset is capitalized on 20th of March or 25th of March and it's a large plant. So how this has been capitalized, what is the proof that it has been put to use? The Income Tax Act says when the asset is put to use, I am authorized to claim the depreciation, half year depreciation on that. So the assessee was asked to produce the proof of put to use, that the plant was switched on that day. How will you prove that? So if you are having such kind of instances, keep the documentation. Luckily in that case, we had a plant inauguration invitation and it was inaugurated, that plant was inaugurated on 18th or 19th, there was a ribbon cutting, the photos were there and the plant was switched on, there was a trial run, there was a production, so these kind of things were there and luckily we had some press reports and stuff like that. We produced that, then the assessment went smooth and the depreciation was given. So I am just stating this as an example. If you are claiming something which gives a reason to ask the question yourself when you are filing the return, that should I keep some documentation, do take that extra step to ask that question and maintain that documentation, which will help you at the time of assessment. Because assessment typically happens 2 or 3 years down the line when you may have forgotten many of these nuances, right? Maybe one plant, the ribbon cutting, you may not have saved that photo unless and until you keep that very categorically in the mind, saying that yes, we should keep that separately saved in support for something. So these are the small bits which everybody should keep in mind if this kind of positions are being taken during the year. Typically this arises for commencement of business, capitalization towards the back end of the year, claiming any huge expenditure which is otherwise not claimed in other years and unusual for the business, to establish that why it is required for the business. So think one extra step and maintain the documentation. Ideal way of preparation of submission, if the question is asked, you keep the final, how you prepare the documentation. As I said, you prepare for the financial statements, deeds, receipts and other relevant documents organized so that you can submit this. Detailed explanation, whatever questions are asked, you give the details in your submission to the authorities in detail. Do not conceal anything, do not underreport anything. You seek professional assistance if you need in interpretation of a question if you have not understood, and you give the timely response. Whatever timeline is given in the notice, you make sure you file the response within that time. These are the do's and don'ts what I have mentioned. These are basically nowhere written in the Act, but from experience I am saying that the do's are proper structure of the response to the notice. If you see that the notice has got 20 points one by one, You answer those 20 points, mentioning clause by clause, so that the officer can relate to it. He doesn't have to search for which point you are answering or which question you are answering. Refer to his questions and answer. Be transparent and provide only required information. Don't give the whole mountain when just one particular herb is required from the mountain, right? That whole mountain, the information about the mountain is not required for his file. If asked, only give that information. Do not over-report. Maintain the records and the supporting documents for at least 8 years, and whatever you are submitting to the department, you keep a record. Why? In the appellate authorities, by chance the matter goes to appellate authorities, you may be asked to resubmit it, or you may have to refer to it again. So whatever submission you are making to the tax office, you are supposed to maintain copies as is at your end, so that any point of time, any information required, you can refer back to that information. And follow the guidelines provided by the authorities. Authorities say that, okay, you provide me these documents in this format. Sometimes they give the tables, or they give you the reconciliations ways, how they need the reconciliation. Give it exactly in the same format. Otherwise, they do not consider that information many a times. What are the don'ts? Do not conceal. So this I am mentioning time and again. When we come to the penalty sections, I will cover why I am saying so. Avoid procrastination. Do not say that I will give it towards the end and stuff like that. It may so happen that he will not consider that submission and he will pass the order. Then you will have a real tough time explaining to the higher appellate authorities why you have not submitted it to the lower authority, and when he has asked it in a particular notice or so. So do not delay it further. Do not claim ineligible deductions. If you think that some deductions are not eligible for claim, and by mistake it has been gone into the P&L or gone into the computation, remove it out. You have the option of changing your computation while doing the assessment. Do so. Review it, whether the claim is eligible, not eligible. If you think something is by mistake gone there which is not allowed under the Act, there is no harm in saying that there is an error which has happened and I am rectifying the error. Okay? That can also save you the penalty, or that can save you the penal provisions under the Act for applying the additional tax and penalty on that. So if you see that something has gone by mistake, you can rectify yourself while doing the assessment. And avoid misrepresentation and wrong facts. If the officer has figured out that something what you are telling is not correct and he is asking you time and again, so do not continue on that fact if it is wrong. If it is, it has to be a correct representation. Do not ever get into that zone. Once the assessment is done, the assessment order is passed, and if you see that there is a demand computed and you want to go on appeal, you can file for stay of demand. The demand, as per the civility circular, if you are going on to CIT appeals, the first appellate authority, you can pay 20% of the demand and can ask for a grant of stay for the balance 80%. Many a times the stay gets granted, but on the portal the stay is not visible. In that case, you should insist that the officer gives you a stay order by writing. Otherwise, you have the chance of getting the demand adjusted from your refunds, or your bank account can be taken into consideration for a freeze or something for that recovery of demand. So, getting a stay from the officer is very much necessary. Point one. Point two, sometimes for the high pitch assessments and all that, when I say high pitch assessments, it is like more than 5 to 10% of the assessed income, returned income. If the assessed income is a multiplier of the returned income, it's called the high pitch assessment, and the demand is very high. Assessee has the right to approach the tax officer for a stay of demand, full stay of demand. it is unlikely that they will give a full stay of demand. They will still ask you to pay a percentage of the demand, and sometimes they give installments and all that if the fund flow is not there. But it is very, very required document that you get the agreement in writing. If you have agreed that you will pay only 10% because it's a very high pitched demand, so then you get it in writing so that the recovery does not happen while you are on the appellate forum. And if there is a stay rejection by the officer, you have the ways and means to go on appeal. That Tanmay will just cover in her appellate forum discussion. If the stay does not get accepted, you can appear in the appellate before the appellate bodies to get a stay higher ups, to the CIT, to the ITAT. There are cases where the AO says that he cannot give a stay and you have to go to PCIT for a stay. You have to approach to the commissioners and principal commissioners to get the stay and talk to them. If they reject, then only you go for appellate forum. That's the general procedure. Reassessment. We were discussing about reassessment a while back when I was telling that if the officer does not pass the order on time, what happens? See the conditions. The reassessment has to happen when there is a new information. The new information can come on many formats, like if there is an exchange of information, if there is information under section 90 or 90A, or any information which requires in consequence of the order of the tribunal or Supreme Court or High Court. So if there is an assessment, the officer has seen all documents and everything has been disclosed before him, the information is there before him in the file, there is nothing new, there is no chance that the reassessment can happen. And if there is a reassessment, you can challenge the validity of the reassessment before the appellate forum. Onus is on to you how to prove that no new material or no new information has come in. So whenever there is a reassessment, when there is an assessment completed, check the validity, whether this has been disclosed. So while I was telling that disclose and submit, this has got a very important role to play. Here, you can argue saying that I have submitted on the submission dated so and so, or this transaction is disclosed on the notes to accounts in so and so notes, or to the explanation so and so, or it is disclosed in the Form 360. Every information what is disclosed in this way, either by documents, by your financials, by your 360, by your submission, you can refer to that and say, hey, I have referred it, I have given it in front of you. If you have not seen it, it's not my fault. Your reassessment is not valid, right? So it is very important that how you disclose, how you submit everything, and how you point out saying that it is as per what you have asked and what I have given. So that is where it plays a role, that disclose everything. And when the informations are under this particular point, saying that an assessment has not happened or new information has come or exchange of information has happened, so the assessing officer wants to do a reassessment, so then the reassessments can be done under 147. Specified authority in case of notice under 148 is issued within 3 years from the end of the relevant assessment year from CIT, PCIT, DIT and PDIT. For notices after 3 years, it has to go to the higher authorities, and after their approval only, the notice can be issued. And as per the the recent amendment, 10 years it can be open in case the assessing officer has evidence for income escaping assessment exceeding 50 lakhs or more. Below 50 lakhs, the reassessment cannot be done, even if there are reasons to believe that income has escaped assessment. So proceedings and disposal, generally a notice has been issued and a show cause notice is issued, SAN, that whether just this is a reason to believe that income has escaped assessment. You submit your reason why it should not be applied. If it is to the satisfaction of the assessing officer, he closes the assessment that point of time and he does not issue a 148. Otherwise, if he is not satisfied that income, he is not satisfied with the response of the assessee, and he believes that income has escaped assessment, he has every right to open the assessment and does the assessment. While doing the assessment, he asks the regular questions, as in, he asks in the course of regular scrutiny assessment period. You are supposed to respond to him, give all the answers, and then the order is passed. Notice under 148 is actually invalid if it is passed beyond the statutory time frame. There are X number of cases in the appellate forum saying that the notice is invalid, so it should not be considered. It is not carrying the day, it is invalid. So we had a recent case where the assessment is carried on the amalgamating entity after the amalgamation order was passed. We have informed to the officer saying that the entities are amalgamated, but it has been carried on into the name of the amalgamated entity. So is it valid? Question. Any answer? Right? So no is the correct answer, because see, A and B is getting amalgamated. B is getting amalgamated in A. B does not have existence. Official liquidator has taken it out from the register of companies list, right? And we have surrendered the PAN. So, and once it has been informed to the tax authorities, any assessment, reassessment in the name of B is completely invalidated, right? And if that has been informed, you have the proof that you have informed and that assessment is done, that assessment can be challenged in the court. So this kind of instances are there. So actually there are a lot of litigation in and around 148 on the validity of 148, whether the reassessment is valid or not. Invalid on the basis of wrong information. If there is a wrong information and basis that wrong information it is opened, that is not the assessor's fault. So then the whole information is wrong and then the assessment is invalidated. And the presumption of the AO that the assessee has escaped income. So judiciary has noted that there is no actual proof. It has to be a proof, a substance with the AO that he believes on what basis. There should be a basis for that belief that income has escaped assessment. It should not be something on the air. So if he finds a document that this income has not reported, underreported, then only this reassessment can be done. Otherwise, it can be challenged. This is invalidated. Like demonetization time, many of the assessees, they have deposited cash into the bank. Now cash deposited in the bank may have got some reasons why that cash has been deposited. If it is withdrawn in the past, if it is received from someone, if there is a loan, if there can be so many other reasons. Without checking that reason, if blindly someone considers that as income in the hand of the assessee, then that is unjustified assessment, right? So there have been instances when appellate forums are considered saying that this is not a valid assessment. Not having jurisdiction. The assessing officer is doing the assessment, reopening the assessment without having any jurisdiction. And reassessment based on the search process where somebody else's search, there has been probably a sheet of paper or a name which has been written. Based on that, somebody is reopening the assessment. Is it a justified matter? Unless and until there is concrete proof or evidence or any supporting document that the assessee whose income is getting reassessed, he or she is involved or that company is involved, it cannot be done. There has to be a concrete proof. It should not be basis of the belief. We go to best judgment assessment, section 144. Which are the cases where best judgment assessment is done? This is like when the assessing officer is doing the best judgment he is applying without the participation of the assessee. when he is just applying his judgment on a particular case and deriving at the assessed income or judging the in return of income. So there the must prevail condition is there has to be the notice, there has to be a notice given or opportunity given to the assessee. If there is no response, if the assessee does not send any response to the notice, then only this best judgment assessment can happen. We have seen couple of cases during the COVID time when people have not responded on time due to various reasons. There have been so many best judgment assessments have happened, and when challenged in the appellate forum, this has been overruled also. So it has to be a proper reason why a best judgment assessment is happening. Now the downside of best judgment assessment is the assessee, there is no submission, no representation. So whatever is there prima facie on the return of income, on the accounts or on the 3CD, based on that certain conclusions are drawn. So that's the downside of that best judgment assessment. These are probably the extreme cases where there are no responses, and then the this kind of decisions happen. But there are comments from the appellate forum also saying that in case of best judgment assessment, if assessee has not considered certain claims in the return of income, and while doing the best judgment assessment you see that that claim should be there, it's the officer's responsibility to bring in that claim in the return. Okay, so there have been one case where the depreciation has not been claimed or underclaimed. So it was commented that it's the assessing officer's responsibility to bring in such claim if it is ought to have given to the assessee. So it's a two-edged sword. Both sides have to be seen. And this can be done only when the AO is giving an opportunity, issuing a notice, and not satisfied with the correctness of the return and the computation, then only these provisions can be invoked. This is like when it is compulsory and when it is discretionary, what can be done. This is the nuances of the Act, and just stick through it. Now there have been the changes in the timelines over past, and as it stands now, it has to be completed within 12 months from the date, from the end of the assessment year in which the income was first assessable. So earlier it started from 21 months, and as you see, over a period of time like 21 months to 18 months, it has been reduced. For 21-22 it was 9 months time frame, and now it is 12 months. These are the revisionary orders which the tax authorities can pass. Now if there is an order which is prejudicial to the interest of the revenue, that order can be revised under section 263 by a principal commissioner or commissioner. So they have the right to see that if there is something erroneous and something prejudicial to the interest of the revenue, they have the power to see the file once again, within 2 years from the time frame, revise that order and pass a fresh order under these provisions of the law. These orders are not appealable to the first appellate authority because it is passed by the principal commissioner or commissioner already. So for them, you cannot go to first appellate authority, it has to be appealed before the tribunal, right? So these orders are taken only when there is a gross error in the order or something has been ignored by the assessing officer while doing the assessment, or the revenue feels that it is grossly wrong. These provisions are invoked and there is a possibility of reassessment or revisionary order under these particular sections. Here also the officer will ask for the principal commissioner or commissioner will ask for submission of details, review the details and pass the order. Generally we have seen from experience saying that 263 or 264 is done when there are some audit objections or review of the file, or the officer has not considered a disallowance which is otherwise there on the past years. So in those cases, generally 263 or 264 is invoked, but 263 also has to be like, there has to be a ground that the information which is seen by the assessing officer is not, he has not done error or he has not overlooked. It has been submitted, he has seen. In those cases 263 cannot be invoked. So the principle, these are the steps how the 263 revisionary orders are generally done. Principal Commissioner examines the records or the facts of the case. He would see that whether it is erroneous or prejudicial to the interest, he will issue the notice to the assessee. The assessee has to give the response, what is his way, how he wants to interpret that particular transaction for which these revisionary orders are invoked. And the Principal Commissioner may give in the assessee of, like, after doing the inquiry, he may modify the order, or there have been instances that he has dropped the procedure if he is satisfied that it does not require further adjustment. So there can be both cases. And if he does the adjustment and assessee is agreed by that adjustment, that matter can be taken up in tribunal. Time limit. The Commissioner cannot revise the order of the assessing officer after expiry of 2 years from the end of the financial year in which the orders sought to be revised are passed. So within these 2 years, these 263 provisions has to be invoked. Otherwise, order cannot be revised. And no time limit in the following cases. An order of revision may be passed at any time in the case of an order which has been passed in consequence of or giving effect for the appellate forum. Like if the ITAT has passed anything and in response to that some 263 orders are getting passed, it can be passed even after that 2 years of time. 264. What is the time limit for 264, which is in favor of the assessee? On application made by the assessee under this section, Principal Commissioner or Commissioner shall pass the order within 1 year from the end of the financial year in which the application is made by the assessee. So I just want to take 1 minute on this particular provision. There are cases where the claims or deductions are missed by the assessee while filing the return. Nowadays, for revision of the return, it's a very short time frame given, right? Till the December of next year, you have the time frame or the window is open for filing a revised return. Now, if the revised return chance is gone and you do not have the window for filing a revised return or revising your computation to claim a particular deduction or claim a particular exemption, whatever it is, how do you file it? The updated return can be filed only when tax is due or tax is more than what you have filed in the original return. So how will you claim a particular thing? Or probably you have disallowed something saying that a particular position and now you have a Supreme Court case law saying it can be allowed. How do you bring back the claim? The window is not there. Your case has not been picked up for scrutiny. You have a provision which is section 119 application before the civility or the PCIT through which you can bring back the claim, right? So when you file this kind of application, if the matter is more than 1 crore, it goes to CBDT. CBDT has the power to direct any officer to look into that. If the matter involves amount less than 1 crore, then the PCIT looks into it. Once the PCIT looks into it, PCIT has the power under this section to guide the commissioner or any assessing officer to evaluate the claim, and he can pass one order under this to give that deduction. Okay, so there are powers given to the CBDT and PCIT and CITs to revise computation to grant exemption or claim for the assessee, even when the timeline for revising the return is gone. So this section comes to a great help when such kind of claims are omitted. Transfer pricing assessment. Being in Bangalore, it's a very popular, favorite subject for all of us, right? So, what happens for transfer pricing assessments when we have the notices from the office and we have to represent? And you must have noticed that since last year, the submission time for the TP documentation is how many days? Since last year? Anyone in the audience? No, 30 days was earlier. Now it is what? It's been revised. 10 days. Okay? So, interesting modifications. So, assessing officer obviously have the right to give you extra time and if you ask for time, but this time frame given by the, the provisions of the Act is 10 days. Within that you have to submit. So what do you maintain to prevent any kind of adjustment or unnecessary questions, etc.? You should maintain robust TP documentation along with the defense working papers. If you are having a particular set of margin, why you are having that margin, or you are having loss, why you are having loss, maintain that robust set of documentation. Global strategy, policies, methodologies and calculations maintain in detail. Many a times we see that the companies follow the policies implemented by their overseas entities or holding company. So maintain the documentation. If certain stand is taken across the countries, get that documentation, get the basis how that has been arrived. Maintain that documentation in India so that that supports these transactions. And update regularly and change through the market operations. Many times we see that a particular policy has been decided, say in 2005 or 2006, and company is just following that. That should not be the case. Every year or every 2 years you should review your transfer pricing policy and see how contemporary that is. That is the basis why the contemporaneous documentation is maintained. So if you are following cost plus 13 for last 20 years, just review and see whether that 13 is actually the ALP or that needs any change. So just mention that, but it is applicable for every transaction with the AIM. And if there are advanced pricing agreements with the tax authorities, you see that whether it is applicable, for how many years it is applicable, maintain the documentation. What are the resolution for the TP assessments and the controversies and litigation? The long submissions are generally not well accepted by the TPOs. You be to the point and you justify why you are having the that particular margin or that particular comparable. And avoid submissions at the fag end. As I said, like there have been tendencies saying that we delay and towards the end of the assessment we submit all the documents together. There have been instances they don't even read it and they don't even refer to that in the submission. So then it becomes our fault to prove to the higher appellate authority saying that I have submitted this has not been considered, so please consider, otherwise additional evidence, additional ground, blah blah. So to avoid all those confusions, submit the details, maintain the details, and when questions are asked, submit those details. And the mutual agreement procedure, map, arbitration, if anything of that sort can be done to support your margin, to support the transaction, take those steps and make things clear to avoid any litigation. Now, what are the areas of litigation which we have seen in the past few years? Of course, we have evolved in a long way, like how we have started from 2003-4 to now. And we see that the TP litigation is in a much matured situation as compared to, if you ask me what we have seen in 2008-9 compared to now, we see a little matured kind of dealing in the assessment. So the questions are asked generally whether the application of sections to few parties, whether they are the they are the A's, associated entities, international transaction, deemed international transaction. So evaluate the transactions, whether the deeming provision can be brought into picture, whether it should be reported, it should be tested, and choosing the right, the method which is most appropriate. Many a times we choose cup, internal cup, external cup, whether it is appropriate, not appropriate. Department wants to do white TNMM. You are not having enough margin to justify TNMM, so this kind of litigation happens. So how you have chosen the most appropriate method, it is to be documented well. Acceptability of a foreign tested party, many a times they do not accept the database and who is the tested party and what are you comparing with, that kind of litigation arise. Filters. The filters are rejected. The filters, while doing the comparable study, whatever filters you have taken, that is sometimes rejected by the tax office. So do maintain the document well that what filters you are applying. Like a 1,000 crore company or a 500 crore company cannot be compared with a 10 crore company's performance, right? So the filters have to be appropriately taken. The company who is having more than 25% related party transaction cannot be compared because their comparability also is effective. So selection of comparable becomes a very important thing. Another typical issue what we see is apples compared to oranges. The data set what the tax authorities come up with are the data set which is not at all comparable with this tested party. So they are in say R&D of a very specified design, and the tax office is coming up with R&D of pharma or R&D of some other companies. That obviously is apple to orange comparison. Establishing that itself becomes a challenge, that a comparability or a data set acceptance. So if you are supporting your company's margin with a particular comparable data set, have the functionality tests very categorically mentioned in your TP documentation so that questions are not asked and department knows that what you are compared with. PLI adjustments and computation, this also are subject matter of litigation. So as I said, most appropriate method is is many a times this is questioned, and you have to have the justification why you have chosen a particular methodology for testing the party. And selection of the tested party, because there is no specific guidance given under the Act, we follow the OECD guidance, and how OECD has given, the basis is followed. When questions asked, you give the justification. The crux lies in how good you maintain, how better you maintain the documentation. And that's how you can win this litigation. Filters. The accepted filters and what generally is the tax office also they do and they accept. Financial year, the current plus 2 prior years. Turnover criteria, no transaction level differences or reasonably accurate adjustment you carry. Operating income, export and salary cost, this is there in the rule itself. RPT filter, the related party transaction filter, generally more than 25% RPT is excluded. And ratio is subjective, so when you are when you are getting the population, the higher you have the number of companies, the better is your comparability, the search is. And you check your functionality and apply. You delete the companies who are not matching to the functions of these companies. Then only the data set becomes acceptable. Does this means the section rules and ITAT as finality for the question of law? Is it the question of law, facts? It's a combination of all. High Court of Karnataka has said that tribunal is a final fact-finding authority and questions on data set and comparability cannot be taken to the High Court, right? So it is the ITAT's decision which is the final. Okay? And concrete evidence or evidence for the receipt of services and all that, you are supposed to maintain the email trails and all. Many a times we see that management service fee is getting disallowed, right? So management service fee paid to the overseas company, department believes that it's a way of repatriating profit. So it is disallowed. And the way to test is always, it is the comparability test and overall TNMM. So it is very much important that you prove that how the services are being received. The receipt of service is the crux here to get through this kind of litigation. When benchmarked on combined TNMM approach, can single transaction be benchmarked separately or other RPT transaction? The company as a whole or separate transaction? That also is subject matter of litigation. So every transaction will you test. They pay management service fee, they pay a purchase and sale, there are the sales done, there is purchase done, there is royalty paid, there is other fees paid. So every transaction should you separately test, or you will test the overall company's performance and say that this company is earning enough profit in this range and it is allowed as it is concluded at ALP. So that also is a question, that whether you should separately test or together you will test. And will cherry picking be allowed? Can the transfer pricing officer accept everything and just pick up one transaction and say that it is not at ALP? Will that be allowed? Okay, Bangalore ITAT has said that no, it is not allowed. Cherry picking is not allowed. Either you say that the transactions are not at ALP, or you say that the transaction at ALP. One transaction is not at ALP, rest of the company is earning good profit so that they are at ALP. That is not allowed. Okay? Reimbursements, generally it is cost to cost, no markup allowed, but generally they need all the documentation. So today morning I had a half an hour conversation with one of the clients to explain why on a cost to cost reimbursement he has to keep all bills. He says, who keeps this kind of travel bills throughout the year? I said, every company is expected to maintain. So whenever you are doing a cost to cost reimbursement, how insignificant it is or how significant it is, irrespective of the quantum, you are supposed to maintain all the details because it is cost to cost, no markup charged, it is not tested for ALP, right? Segmental comparability, if you have a AE segment and a non-AE segment, whether they are comparable or not, how the allocation is happening for indirect cost, whether the allocation cost, allocation keys are documented, consistently followed, this has to be looked into, and you have to probably establish to the TPO that how this segmentation is done. And comparables with supernormal profit. In the years where some unusual event happens, typically in the year of merger or demerger, we see this kind of supernormal profits happening. So what are the basis for arriving at the profitability? That has to be documented. The procedural aspect, transaction with the persons referred under section 115 BAB and considered as SDT. And CBDT has power to make the safe harbor rules. So if you are adopting the safe harbor rules, you have to document that and you have to prove to the TPO how safe harbor rules have been applied. And as I said, time limit to submit the documentation has been made 10 days from the date of receipt of the notice. Now, faceless assessment, I will quickly try to cover, I think we are overshooting time. Faceless assessment scheme has been implemented since last 2 years, and the CBDT has framed the rules in and around that. How there is the advantages, you do not have to go and wait for longer hours there. You don't have to queue up in front of the tax officer's rooms. Those were the days we used to go in the morning because the notice says 10 a.m. in the morning. And they will call at the 5 p.m. in the evening with the bunch of files. We are waiting, sitting there, and like us, like so many people are waiting. So this kind of things we do not have nowadays. And even when the tax officer are asking that if you submit your all books of accounts, we can just submit it through the, in the portal. So carrying the large voluminous files and explaining all that, that is not there. So that's the advantage. Disadvantage is you are not having a face-to-face interaction. So if you are supposed to explain something or highlight something, underline something, or underline and highlight and explain and submit a case over the table and say that, sir, I am relying on this, you are missing that opportunity. And you are missing that opportunity of hearing his prima facie view, saying that what is his opinion on that particular transaction, whether he accepts, he doesn't accept, or he rejects. So that is the point which we are missing. So everything has got a plus and minus, but I think the pluses are much more, so the minuses are being lived with. So this is mostly how the faceless assessment is done. The National E-Assessment Center, it is to facilitate and centrally control the e-assessment. The total forum is considered as National E-Assessment Center. Regional E-Assessment Center works with National Center. Assessment unit, which actually verifies, collects everything. The verification unit verifies all the data and all the information. It raises the inquiry and sends the second questions and all this on the statements which is submitted. The technical unit actually does a research on the background work, does not do a customer interface, assessing in person interface. And the review unit, if there is a review required, then it goes to the review unit. So this is how mostly the forums are there. The procedure, how it happens is, NFLC assigns the case to the specific assessment unit. Then notice is prepared by the assessment unit and assessee is required to file the response, and then if there are further queries and the follow-up questions, then the assessing unit poses that in the portal. In the portal, when the questions are there, it comes in the emails of the whatever email ID you have given. According to that notice, you are supposed to give the responses, and as I mentioned, the responses, if it is filed like point by point, it is very easy for the assessing officer to refer that which question you are answering in which format, and you give the annexures or attachments in a particular format. Review report is prepared by the RU, is forwarded to the AU for evaluation. RU may suggest such modifications as it may deem fit to concur the draft order and intimate the same to the NESC. After all that is done, then the order is prepared and finally the assessee gets the order. Then here only the point which I wanted to mention here is practically it goes through all these phases, but we see that where there are the bulk data submission is there, sometimes the bulk data is not reaching to the assessing officer in the way we want him to read. He gets lost, and when we ask him for a video conferencing and all that, then probably he says, oh, you have submitted this, which annexure, which submission, etc. So make sure it is properly numbered, properly submitted, so that it gets the attention of the assessing officer. Personal hearing is possible through video conferencing. The problem what is faced in the video conferencing is sometimes the password or the meeting bridge is not circulated well in advance. It is just circulated 1 hour in advance. The network is not good in the assessing officer's end, cannot hear, etc. Sometimes we write in the chat box, we update again in the submission, but end of it, the video conferencing at least gives a chance for explanation. The issues, as I said, that it's difficult to approach. Time and again we submit the same response and sometimes it is not attended to, it is not considered in the order. The same point comes in the order without considering the submission. It becomes difficult to establish to the tribunal and to the CIT saying that how we have already submitted this and it has not been considered. The specified time given is very less. Sometimes we see that assessment is closed without even giving enough time or sufficient time, as we may call it. The sufficient time should be given, and if it has not been given, you can challenge the assessment on that ground itself. Many a times we submit the repeated submissions. One submission is given, again it is asked that whether you should submit the same thing again and again. There have been judicial precedents which says that if enough time is not been given, the assessment is not justified. So you are within your rights to challenge the assessment on that ground. till the last working day, should the assessing officer wait for your submission, or they can pass the assessment order? They should wait, right? If he has given you time for a particular time in the notice, he should wait for that. So there have been instances, we also have faced that, like they have given the notice for 7 days, but before that 7 days is concluded, on the 7th day the order is uploaded. That means they have not waited till the last day, right? So till the conclusion of the work day, there has to be a chance given for the assessee to submit the information. Now comes penalty. So these are the reasons which can cause penalty. Now when the assessment is done, if there is a adjustment, that adjustment is subject to tax. So you pay tax at 25-30% on that adjustment. Penalty is imposed on top of that as a reason what has been noted here. These are the main reasons why the penalty can be imposed. The first, reporting and misreporting of income, underreporting, misreporting. So when I was mentioning that report it correctly, conclude, reconcile, this is the reason why you should do that. Otherwise, this penal clause can be imposed. Non-filing of the audit report and non-conclusion of the audit in time. Undisclosed income. This is the most favorite topic of tax authorities of late, and you must be seeing n number of orders having undisclosed income in the order. Whatever is there, it is treated as undisclosed income under section 68. So, probably the most favorite discussed section in the recent assessment is section 68 and 69. So, undisclosed income. Is there any undisclosed income? And if there is, it is taxed at a higher rate and penalty is imposed immediately at 100% on that undisclosed income. Failure to maintain the books of accounts. Do you maintain the books in a particular manner, in a particular way, how the Income Tax Act requests you to do that? False entry in the books of accounts. You go back and say, no, this entry is not to be done in this particular way, or there is a bogus entry without any basis, without any justification, that can cause you penalty. Malafide intention and willful misconduct. When I was telling that do not underreport, do not conceal, I was mentioning about this section that if you have got anything which you have not reported, they may hold you responsible for malafide intention and willful misconduct. That when asked, you have not given this information, so the penalty will be imposed, and this penalty can go for 100 to 300%. Concealment and misrepresentation. So if you conceal anything, if you do not disclose anything and they find out from various other means and sources when you submit other information or any other source, and which is a concrete evidence, then they can hold you responsible for concealment and misrepresentation. Okay, these are various sections of penalty which can be imposed. For the lack of time, I will probably rush through these sections, because this just says that what is the percentage, what can be imposed, what cannot be imposed. And remember, all these sections you can challenge to the appellate forum whether it is justified or not justified, whether you have done it or not done it. So for example, if they impose saying that you have concealed a fact and you have not represented it, then you may pull out the submission where you have submitted that, or you may pull out the notes to the accounts where it has been disclosed, or to the tax audit report. That is why utmost importance should be given to the notes, to the accounts and to the tax audit report for disclosure of the transactions. What can probably become under scrutiny of the tax authorities. So disclose to the extent possible. So these are the sections under which the penalty can be imposed, and most of the cases 100% to 300% penalty can be imposed. Okay. And the last one I want to cover is on penalty matter is when penalty can be kept in abeyance. If the base matter is on first appellate forum, till the first appellate forum confirms the order or the adjustment, the penalty can be kept in abeyance by law. So, if the penalty notice is issued and the assessing officer wants to start the penalty proceeding, you can very well say that I am on appeal. Till the matter is confirmed by the appellate forum, this matter has to be kept in abeyance till the matter is confirmed by the appellate authority. And he, by his law, he has to keep it in abeyance. After CIT confirms, he is well within his power to impose the penalty and confirm the penalty on the order. There is a time limit when he has to impose the penalty and who has the Now this are very few facts which are the very important or interesting facts of the assessment, which you can keep in mind when you are doing the assessment, what you can challenge, what you cannot challenge. Wrong address and name on the notice. If the notice is going to a wrong address and to a wrong name, despite you informing the office for a correct name, you have changed in the portal, you have put it in the return of income, you can say that this assessment order is not valid, right? Then information with the department, if any adjustment is done without you submitting the information and without a concrete evidence which belongs to you, on suspicion basis or somebody else's information, based on that, if the assessment is done, you can challenge it. That information, based on that, if the assessment is done, it's not valid. Information found in others' assessment, if it is imposed on you and there is an adjustment which is uncalled for, that also can be challenged. Material found on record and not on suspicion. Sometimes we see that the assessing officer has a pre-believed notion in his mind saying that this is believed that you have done this. Actually, you probably have not done that. So on that basis, if there is assessment done, that is not valid. Jurisdictional issues and factual data, this also we have discussed, so I will skip that. Sufficient time. What is sufficient time? Towards the back end of the assessment, if they ask for the whole books of account and the set of information, say for 100 vendors, he asks for the register or ledger and gives you 3 days time. Is it sufficient information, sufficient time given? Of course not. You can challenge that. And you have to establish that he has not asked it before and he has just given 3 days time to give 100 ledgers in that short span of time. And there are times where irrelevant judicial precedents are quoted. That also you can challenge in the appeal, which is not applied to your case. Application of law, whether the law has been correctly applied and interpreted, that also is important. If you see that the provision of the act has not been interpreted correctly and the law has not been applied, you can challenge. That is also within the rights to challenge that assessment. DRP, if there are the TP related cases or any foreign assessees, any non-residents, there are any assessments, there are any orders, the assessing officer issues a draft assessment order and gives you the 30 days time to respond to him whether you want to go to dispute resolution panel. Dispute resolution panel is a panel formed by 3 commissioners who hears a case. It's equivalent to a CIT appeal. The only difference is here there is an international transaction involved. Either with the A's or a non-resident is having this kind of adjustment. In those cases, you can take it to the dispute resolution panel. The benefit or the advantage of going to a DRP is you get the resolution in 9 months' time. Okay? So the faster resolution is what you get. Whether they hear you, don't hear you, that's for a different debate. But you get a faster resolution, you are before the tribunal, you get a better audience there. So that's a main advantage of a DRP. Plus, sometimes what happens, the DRP, the commissioners look into the details in a very different way and directs the officers to execute the final assessment order as per their direction. So with this, I close my session and hand over to Tanmay for the appellate forums.
Thank you, CA Ishita Bhaumik. I request CA Raghavendra sir to just come on the dais and hand over a token of appreciation from the CA branch. Can we have a round of applause, please? Thank you, CA Raghavendra sir, and thank you, CA Ishita ma'am. It was our pleasure to have you here. Thank you so much. So now we'll move on to the next session and the next speaker, Tanmay Rajkumar. So I request her to please come on the dais. And I request again Raghavendra sir to please give a floral bouquet. So meanwhile, let's have a small 10 minutes break and we'll continue with the session of Tanmay. Thank you. So we'll reassemble in 10 minutes. Thank you so much.
Welcome back and good evening to everyone. So the next part of the workshop is going to be addressed by Advocate Tanmay Rajkumar. I request our chairman to escort her to the dais and greet her. Welcome to you, Tanmay. Just take a quick minute to introduce Tanmay. Tanmay is a practicing advocate specializing in taxation, litigation as well as advisory. She focuses primarily on direct taxes and handles matters for large corporates at the Income Tax Appellate Tribunal and High Courts. A good friend of mine helps me with a lot of queries when I go back to her, so I know her at a personal level. And on completing her law in 2010, she started her career in litigation and at King and Partridge Advocates, where she is now a partner and heads the firm's tax practice. She also spends time in civil litigation when time permits and publishes legal articles too. Apart from the law, she has a passion for reading and keenly follows Indian classical music. It's a pleasure to introduce Tanmay to all of you. Tanmay, it's a pleasure to have you. Thank you for being here, and over to you.
Thanks everyone for being here on a Friday evening, and I'll try and finish. I will not hold you up for too long. Right? So we always call it the art of representation. We don't call it science. Why do we call it the art? Because we don't have formulas, we don't have recipes. Right? An art is creativity, there's strategy, and there's ingenuity. That's why it's called an art. So today we'll try and see how we can develop this art amongst ourselves. I will try and, of course, art of representation is mostly what is advocacy, what are your skills, all that is what is really representation. But today I also want to cover really the basics, right, before we go to an appellate authority. What are the orders that are first of all appealable? Then what do you have to do? What are the filing requirements? What are your basic paper books, and what are the basic rules that you will have to follow? I'll try and cover all that up. Firstly, the hierarchy. I think most of us know this. The first, we get an assessment order, which is followed by an appeal to the first appellate authority, which is the Commissioner Appeals, and you also have the Joint Commissioner Appeals, which has now come in, right? Earlier we used to have the Commissioner Appeals, now we also have the Joint Commissioner Appeals. And then it goes to the Income Tax Tribunal, and from there to the High Court, and then to the Supreme Court. This is a basic hierarchy of our appeals. And what is the life cycle of an appeal? Typically what happens is you get an order, which is an assessment order, which most of it was covered by Ishita. So when you get an appealable order, you have to file an appeal, and then you get a notice fixing a date of hearing typically, which now with your e-filings and e-appeal scheme, you get it on your email or on your e-portal. And then you have the hearing of the appeal, which if it's a CIT appeals or a first appellate authority, it is mostly VC, right, a video conferencing. And if it's ITAT, which is the tribunal, you have an option of video conferencing in most benches today. But largely, this is from a practical perspective, largely physical appearances is what is preferred by the members, right? And of course, filing of written submissions, we'll try and see what we need to put in a written submission. And then it culminates in an issuance of the final order. So this is a small table of what are the different authorities that we have, that appellate authorities whom we have to deal with. Typically, you have a CIT appeals, JCIT appeals, ITAT, High Court and Supreme Court. Time limit to file an appeal before the first appellate authority is 30 days from your receipt of the order. It's always receipt of the order. This is a question that I get asked many times. The order is dated 30th of April. I want to file the appeal by 29th of May, right? So the first question I ask is, when did you receive the order? Because if you have received the order only on the 1st of May, your time limit of 30 days starts from the 1st of May. Of course, with now e-portal and your e-orders, e-assessment orders, really the date of service and the date of the order has sort of merged. But earlier we used to have this problem of when does your 30-day period expire, right? So 30 days is the time for first appellate authority, 60 days is the time for ITAT, 120 days is your appeal to the High Court. Now, what are the time limits for disposal? CIT appeals is 1 year. Of course, this is, the statute says wherever possible, so it's not mandatory. First appellate authority and ITAT will have some leeway there. ITAT has 4 years. Of course, now with the pendency falling drastically in ITAT, we are getting orders within anywhere between 6 months to 1 year. That's the realistic disposal time today, right? And what are the questions that these authorities can look at? Your JC and your CIT appeals and ITAT can look at both facts and law. But when it goes to the High Court and Supreme Court, it's only a question of law, right? So it's very important that our facts are sealed before these two authorities, because we will not get a chance to raise a fresh question of fact before the High Court for the first time. So we have to be very careful on what facts we are presenting. And then what is your scope for additional evidence? Obviously, because your fact-finding authorities are your Commissioner Appeals and the ITAT, they can admit additional evidence, but High Court and Supreme Court, you will not get that opportunity. Then quickly we'll see what the First Appellate Authority's scope of powers is like. So JC Appeals is now, like I said, very recently reintroduced again. It was originally there when the IT Act 61 came. It was introduced in 64, but was done away with when CIT Appeals was created as a post in 1998. And now it has been reintroduced in 2023. So quickly, we can go to the appealable orders and see where the jurisdictions are distinguishable. Basically, it's this. So if it's an order passed by the DCIT and below, then it goes to the JC Appeals. Any order passed above the rank of DCIT, it goes to the CIT Appeals, right? And of course, you can have the present appeals which are already pending before the Commissioner Appeals can be transferred to the JC Appeals depending on the authority passing the order and vice versa. And of course, opportunity of being heard when the appeals are to be transferred is to be given, and central government may make a scheme for disposal of the appeals in an expedient manner, which is the e-appeal scheme. We'll come to that a little later. Now, what are the appealable orders? Like I said, before your JCIT, all the orders that are passed by a an authority who's of the rank of DCIT and below will go to your JCIT, and all orders by JCIT and above will go to CIT appeals. Quickly, we'll just rush through what are the orders that are appealable. Intimations under 143(1), your intimations under 200A, your orders under all orders under 143(3), 201 orders, tax collection at source orders, penalty orders, and all your rectifications of any of these orders, you can file appeals, right? And of course, before the CITA, all of these orders, your 143(3)s, penalty orders, intimations, 206, 201 orders, all of those are appealable. But in addition, you also have a few orders. Of course, these are mostly, your erstwhile fringe benefit tax, which was at that point of time appealable before the Commissioner. Modified assessment orders pursuant to APAs will go before the CIT appeals, because APA has been entered into between the competent authority, so naturally goes here. Then orders under 163 treating the assessee as an agent of a non-resident will go to the Commissioner appeals. Orders on successor entities passed under section 170, where your predecessor entity is not found and assessment is made on a successor entity, it has to go to a CIT appeals. And orders under 171 which are on partitioned HUFs. One quick update is, earlier we had section 248 where a deductor could file an appeal before the CIT appeals, where he said I don't have the liability to deduct tax on this amount. He could deduct tax, remit it, and file an appeal saying this was not a deductible transaction. That has been done away with now from 1/4/22, so we no longer have the option for deductors to file appeals. Limitation 30 days, like I said, where there is a delay, right? CIT appeals has the power to condone delay. You have to file an application setting out the reasons for delay. What is sufficient cause? Again, is a typical fight that we see every day, because commissioners are generally, not in favor of condoning delays, right? If it's a small delay of 10 days, 15 days, nobody has a problem. So it is very important for us to explain the delay in the application in a very, very cogent manner, right? What is sufficient cause? The sufficient cause is basically, there's no prescribed rule as to, or a definition which says what is a sufficient cause. It is something that the courts have said you have to see on each and every fact pattern and decide whether it was a sufficient cause. Let's say there was a senior citizen who was not checking her emails often, she was not aware of the orders passed. That is a sufficient cause, at least in the kind of the background that we have today in our country. Error of an advocate or a consultant is that my advocate told me that this is not a case where I have to appeal, right? But I went to somebody else, but that somebody else told me you have to appeal against this order, so I have a delay in filing the appeal. Is that a sufficient cause? Very, very debatable point. There are case laws both ways. Some say that especially if it's a corporate, right? They say you have an in-house team looking into your matters, so you have to be more careful, right? So you can't pass on the blame to somebody else. That is not a sufficient cause. But there are equally other case laws that are saying that error of an advocate is sufficient cause because you went by the advice, you were relying completely on somebody else and you went by his advice. Wrong email address, typical case. These days, orders are not getting served on the right email addresses. So, and ultimately, when a penalty order comes, it comes to the right email address, we don't know how, right? So that's when really we get to know orders have been passed. And that is sufficient cause. Appeal form and what to accompany an appeal. There is a form that is prescribed under the Act, which is Form 35. Right? Today, all your appeals have to be necessarily e-filed unless you are a senior citizen. Right? Anywhere where the return is electronically fileable compulsorily, your appeals are e-filed. So when you open the form, automatically it gives you all of these sequences. So you have to enter your statement of facts, which has to be very brief according to me. It should not be argumentative, right? You say, assessee filed a return on so and so. Assessment was picked up by notice dated so and so. submissions were filed on so and so, assessment order passed, making the following additions. That is a simple statement of fact. You don't have to say without appreciating the submissions dated so and so where I filed all of this, without considering any of this, an assessment order came to be passed. That becomes an argumentative. That is really a written submission. That's not your statement of facts. So we keep statement of facts very, very brief, just for the officer or the commissioner who's seeing it to just get an idea of what are you challenging here, what are the issues involved. Quickly have to be pointed out. Then grounds. I deal with grounds separately when I come to the ITAT section where we deal with how we want to frame our grounds. Then it has to be accompanied obviously by the impugned order, which is the assessing authority's order. Then you have to pay a requisite appeal fees, which we will discuss, and of course the authorization letter in the case of corporates. And of course if you are filing it through a consultant or an advocate, a wakalatnama or a POA may also have to account for this. Appeal fees quickly, if the total income involved is 1000 or less, it's 250 rupees. If it is below 2000 rupees but more than 1000 rupees, it's 500. Where it is more than 2000, it is 1000, and where it is not covered anywhere else, it is 250. So if it's a loss return and your loss has been reduced, you pay 250. Is a pre-deposit necessary? This is a typical question which is also asked, especially persons with indirect tax practice where there is a pre-deposit that is mandatory. Question is there a pre-deposit necessary? Answer is no. The only thing that the law requires under 249 is that you have to pay your advance taxes as per your return. That is all it is. That also, if you have not paid, you can ask for an exemption from the JC appeals or the CIT appeals. But there is no pre-deposit necessary. Quickly, we'll see how we do an e-filing. Right? Like I said, appeals have to be e-filed compulsorily in cases where e-filing of a return is mandatory, which is now practically everybody except senior citizens. And the website for e-filing portal is basically your income tax department portal where you get all your assessment orders. Because for an ITAT filing, you have to do it on the website of the ITAT. So that's a small difference. Here you can do it on your own. You can open it your e-filing user account, and that's where you do the filing. You have to be obviously a registered user on the portal. It is recommended that your PAN and Aadhaar are linked. Valid digital signature to be registered, and details to be given in the form 35, which, like I said, it's a drop-down box, so you will necessarily have to fill in all these boxes. Your basic information like who are the parties, name, addresses, your PAN number, whether there's any pending appeal for any other assessment year, what are the appeal details, what are your taxes paid, what are the details, statement of facts, grounds of appeal, additional evidence if any. So before the commissioner appeals, the drop-down box itself gives you an option of filing an additional evidence petition at the very stage of filing the appeal. So if you missed something before the assessing authority, you can file it with the first appellate authority right away at the time of filing your appeal. Then you have attachments for all your orders and whatever submissions that were made before the assessing officer. So this is quickly what we discussed. What is the life cycle of an appeal? Filing of written submissions. So like I said, you get a notice which fixes the date for hearing, which comes on to your email address, is also there on your portal. By then, it is advisable that you file written submissions, right? Because you will not get too much time. These days, commissioners are not giving too much time, right? Earlier, we could take any number of adjournments when it was a physical hearing. Today, we are not getting that many adjournments. So, we prepare and file written submissions. And in the written submissions, it's very, very important to add a line, always saying, please give me an opportunity of hearing before you pass any orders. This is a standard default line that we have in all our submissions. And when you say that, he is bound to, of course, you also have to place a VC request, looks like. But when you say that, he is bound to give you a request for, video conference hearing. Not sure how much of a difference it makes, the video conference hearing, but I have seen cases where commissioners have been convinced even on a VC hearing. Of course, depends on the facts and circumstances, what kind of a case it was, how simple it was or how complicated it was. I'm not sure how how easily we can do TP matters, transfer pricing matters and all that before commissioners appeal. Because we are finding it quite hard to, convey our messages because they are quite tied up for time, and it's largely the written submissions that will sail you through. So it's very, very important for you to spend a lot of your time on written submissions. Now, what are the powers of the Commissioner of Appeals? They have the power to confirm, reduce or enhance or annul the assessment, but they don't have the power to remand, right? This is something that was brought in 2001. Earlier, they had the concept of remanding it back to the assessing authority. So in case you file additional evidence, additional facts were brought on record, they could remand the case back to the assessing authority. Today, they don't have that option, right? So what do? They call for a remand report from the assessing officer. The moment you raise an additional fact, additional ground, anything, they call for a remand report. And after taking into account the remand report, they pass an order. The other power, which is not really used or exercised, is the power to grant stay of demand. And not many of us know of this also. Of course, there is nothing in the Act that provides them or empowers them to grant stay of demand, unlike your assessing authority who has the power under 220 subsection 6, or your ITAT where 254 specifically confers the powers. There is nothing for the first appellate authority, but it is settled position, and Supreme Court has said this many times, that an appellate authority has the inherent power to grant stay, right? So, of course, practically what happens? Typically, we file a stay application before the assessing authority, and he either grants a 20% payment and 80% balance is stayed, or he refuses the stay. And we are always looking at administratively approaching the PCIT or the PCCIT or whoever it is for, granting the stay at that point of time. But we never think of, if my appeal is pending before the Commissioner appeals, we never think of filing a stay application before the Commissioner appeals. Of course, I have not seen many commissioners exercise that power. If you file an application, it's just going to be lying in the file. But what we can use this is for this, that as long as a stay application is pending, a demand can't be enforced, right? So at least where your doors before the assessing authority are closed, you file an application for the CIT appeals and keep it pending. So if the assessing authority comes back to you tomorrow and says, I have rejected your stay application, please pay up the demand, you have the avenue of saying, listen, my application before the Commissioner of Appeals is still pending, so don't precipitate the demand. Right? So
how to file now? Because it is now online, no? At the time of filing the appeal or subsequent?
you can file it at the time of filing the appeal, but
Simultaneously
subsequently,
you can file?
after that, I believe there is some problem. There is no avenue in the portal.
Yeah.
So what we are advising is you file physically.
Physically, who knows?
There is nobody really. Did we file that application in the e-portal the other time?
Yeah, we did.
Under what written submissions?
Under the written submissions are basically in the CITA form itself, grounds of appeal, we also made a.
At the time of filing,
At the time of filing an appeal, that's the best. After that, really your portal opens only for written submissions. If that
that
happens,
is
then
preferable, no?
sorry.
At the time of filing appeal, filing stay petition before the CIT appeal is preferable.
Yes, it can be done.
Simultaneously, we can file
Yes,
before the
yes.
AO also.
Nothing stops you from applying before both the authorities at the same time. That is possibly a practical way of doing it.
The option is only at the time of filing appeal.
Yes, on the
After
board.
that,
Yeah,
it is not okay.
that is actually a practical problem. This was more of our strategy when it was not completely e-portal or e-filing. But now we'll have to really figure out how we have to do these filings. So like I was saying, this is faceless appeals. Of course, if it's before the central circle or international tax, it does not go into the faceless appeal scheme. I think Ishita covered most parts of how a faceless interaction works. So I don't want to go into what are the advantages, disadvantages and all that. Like I said, we have to avail that opportunity of virtual hearing, virtual conference for whatever it is worth and try and convince the authorities of our case
as much as possible. And all notices, letters, orders are issued through electronic mode only. So it is important that we tell our clients, please keep a watch on your email. Let me know of when you receive a notice. And we are seeing this problem very, very frequently. Many consultants, tax consultants, put their email ID, and for whatever reason the client has changed that consultant, moved on to somebody else, and you are not getting those notices, right? Then you have to go struggle with the ITAT, explain to them what happened, and then there are members who are not very appreciative of this kind of a conduct, because they feel SSEs also have to be, when they know that everything has been electronically being done. So very, very important that when you get a file, if it is coming from somebody else, you make it very, very clear to your client that I want to know the email ID that was given at the time of filing, because I want to receive I want to be in control of all the notices. Either you give your email ID, which is the best, because client has the option to move to any consultant at any point of time. So, but we are also seeing this, that where there are SSEs who don't have an email ID, somebody is creating something, password is not available, so it is the SSE's email ID, but SSE has no control over it. So these kind of problems, I think we have to avoid going forward, try and systematize things, and help clients understand that don't just let somebody open an account for you. You can't have multiple 300 accounts opened, for each assessment year one email ID is given, becomes a troublesome thing. So that's something that we have to keep in mind. Moving on to ITAT, it is constituted by the central government, headquartered at Mumbai, has a president, vice presidents for various zones and several members. A bench which hears your appeal is constituted of 2 members. One is an accountant member and another is a judicial member. An accountant member can either be a chartered accountant with a specified service, a number of years of service, or somebody from the revenue. And you have judicial members who are possibly advocates who have completed 7 years of practice, or a district judge. Right? It has the power to regulate its own procedures, and therefore there is the income tax appellate tribunal rules. I don't know how many of us know this actually. All of the regulations that govern ITAT are in this Income Tax Appellate Tribunal Rules 1963. Starting from dress regulations, starting from how you file an appeal, how you get a notice of hearing, how do you file written submissions, everything is there in this rules. So it's important, it's actually part of our income tax rules. I think volume section 3 or something like that covers, has these rules. So since it's a member of 2, if there's a difference of opinion, you make one of the members makes an application to the president to have a third member opine on the issue, and whatever the third member opines will become the majority view and therefore will be good. Where the amount involved is less than 50 lakhs, it may be heard by a single member. Of course, it can also go before a division bench, but it can be heard by a single member. That is what you see in the tribunal cost list when we say SMC cases, that is single member cases. Appealable orders, or obviously all orders passed by the first appellate authorities, your erstwhile 158 BC, and that was there before 1997, your tonnage tax schemes. Your orders passed under 263 by the commissioner directly come to the tribunal. Right? We should not make the mistake of filing an appeal before the first appellate authority. Then, assessment orders that are passed pursuant to directions of DRP come directly to the tribunal. We had a case where a draft assessment order was passed by the assessing authority. The client filed an appeal for the Commissioner Appeals against the draft assessment order. Commissioner Appeals dismissed it, saying it is not maintainable, it is a draft order. In the meantime, because within the 30-day period he had not filed objections before the DRP, final assessment order was passed. That order client appealed against in the tribunal. Tribunal again said it is not maintainable, you have not come through the DRP route. So this client was ultimately left with no remedy. We had to figure out a way of then
filing an application for continuation of delay and filing an appeal to the commissioner against the assessment order, final assessment order passed, these kind of things. So appeal against a final assessment order through the DRP comes to the tribunal directly. If the DRP route has not been availed of, you go to the commissioner appeals. 263 comes here, OGE to 263 goes to commissioner appeals. Right? 12AA orders rejecting come to the tribunal. There is an internal circular, I am told, that there is some kind of an agreement that all appeals pertaining to 12AA or your 1023, the tribunal has sort of decided to expedite it and hear it within 90 days. So maybe that's something that I have not been able to see that circular or lay my hands on it, but this is what I hear. So if any of you have any of these matters, maybe you can explore the option of expediting. Cross objections. Cross objections, what is a cross objection? When you get an order from the first appellate authority, let's say you have some parts of it which are favorable and some parts of it which are unfavorable. And because the favorable aspects are far in excess, you decide not to file an appeal. Typical example, let me give you an example. Let's say a 14A disallowance has been made. You have taken XYZ grounds, one of the grounds being that the assessing authority has not recorded his satisfaction in the assessment order. Then you have also said, I anyway don't have exempt income, so there is no disallowance under 14A called for. Let's say the appellate authority has held in your favor on the second point, that there is no exempt income, I am not going to allow a disallowance under 14A. But he says there is a sufficient, he makes some observations on how a sufficient cause has been made out in terms of how the company has some expenses from the administrative side which is going into investing in exempt income, etc., etc., investing into investments that can give rise to exempt income, etc. So since you've got a relief anyway, you wouldn't file an appeal to the tribunal. Now let's say the department files an appeal against this order of the commissioner to the extent relief is granted. You always then have the option of filing a cross objection before the ITAT on the ground which was held against you. Right? And this has to be done within 30 days time. It's a debatable issue as to whether, suppose you had another disallowance also, let's say a 37 disallowance of software expenses, which went against you. You did not challenge that. When the department files an appeal against the 14A issue, can you, in the cross objections, raise an issue on the 37 disallowance? Because that was something that was against you from the beginning itself. It's not something that hinged on the revenue filing an appeal, right? So some judgments have taken a view that you can't maintain a cross objection on the second issue if that is not emanating out of the appeal of the review. But if you see how 253(4) is worded, it says, notwithstanding whether you have filed independently an appeal or not, when the other side, the other party files an appeal, you can file cross objections against any part of such order, which means everything is open, right? So my personal view is you can file cross objections against any part of the order, which includes issues you may have accepted thinking, okay, this is a small disallowance, why should I fight when I am not going for the bigger one, right? So that's one thing. And a cross objection will always be registered as a separate number. You will see ITA number so and so, department, cross objection, so and so. It will be given a separate number and SSE. The form is 36A, that is also prescribed, and 30 days again from receipt of notice. Right? So we should be very careful when somebody approaches us with a departmental appeal. Be very careful of keeping this in mind and immediately checking the appellate authority's order to see if there are any issues that have been held against us, and we get that opportunity of filing a cross objection. What are the documents that are required? You have a form 36, which again is prescribed. I will come to whether it has to be e-filed or physically filed later. You have grounds of appeal. You have all the orders that are passed by the lower authorities, and grounds of appeal that were there for the lower authorities. It has to be filed in triplicate, which is 3 copies. You have 2 members and the other side, which is the department, so you have to file it in triplicate, all of this. What does the Form 36 have? It has the name, addresses and contact information of both the parties. Then the details of the order appealed against, tax effect involved. What is the tax effect? Really this may not really apply for assessees, although the form is there and we do tend to fill it. I think it really should apply for a departmental appeal because they have monetary limits up to beyond which only they can file an appeal. We will discuss those monetary limits later. Then in the case of an order passed by an FAC, who is your respondent? Because in the cost title we always say XYZ versus NFAC or the jurisdictional authority. If it's an order passed by NFAC, who should be the respondent is a question we were in a dilemma when faceless was introduced, because really there is nobody. It's a center. It's not a person. But I think there was no clarification really that was issued. Originally we were making both of them respondents. We were making a jurisdictional authority a respondent. We were making NFAC also a respondent. But today I think we have come down to making only an NFAC a party. Right? One important thing is when you have a change of address, you have to file a revised Form 36. We tend to miss this out, and clients tend to miss giving us that information when they change address, but this is very, very important. Then grounds of appeal, to be very brief, concise and precise. Right? So grounds should not be argumentative, they should be very, very precise. We've seen any number of times the tribunal sending back or telling us, these grounds are very, very argumentative, long, we don't want to see this, please file concise grounds of appeal. So we have grounds of appeal, we have concise grounds of appeal. When the order comes, they say, okay, we've extracted concise grounds of appeal. Then they do not, adjudicate on certain grounds in the main grounds of appeal, all kinds of confusion. So let's keep it concise, precise. Say you want to raise a ground on 148. 148, the assessing authority was not justified in invoking his jurisdiction under 148 because this was a case where there was no concealment of fact, and this is after 4 years from the end of the assessment. Let's say that is your brief ground. And then you go on to say, white submission dated so and so, I had given particulars of so and so, when he called for this in the notice dated so and therefore there can be no allegation of non-disclosure. This is not required. Your first ground takes care of everything. So whatever else you want to argue can go into the written submissions. Only brief, concise points that when somebody opens a ground, they should be able to say, this is what I need to look at in this appeal. Right? So they should be very, very concise. Don't give references to any case laws in the grounds. In the case of engineering analysis, this has been held so and so. Extract that entire paragraph, not required in the grounds. This can always be argued. If you have numerous grounds, let's say there is an assessment order making 10 additions, right? Ideal way is to keep it to 10 grounds, limit it to 10 grounds, but that's not always possible. So you can always give subheadings, divide it into different parts and give subheadings, and always ensure that the appeal numbers are consecutively numbered. You put it in the order that we discussed here, right? So consecutively number them, index them properly, and it has to be filed in triplicate, like I said. It has to be signed by the person who is authorized for verifying the return of income, which in the case of a company is managing director. So what happens if there is no managing director, right? So you have to give an undertaking saying that there is no managing director for this company and therefore so and so director is signing the, right? And you have to give us the original certified copy is what we call it. It's normally referred to as original of the impugned orders, and all other submissions or documents that you are giving have to be certified as true copy, signed, right? Which is certified as true copy. Then one important thing is when you're getting the appeal signed,
please ensure that there are full signatures, no initially. Right? Every time we have this problem, especially amongst the corporates, where they come back and say our MD is unwilling to, sit and sign 10 pages or 10 into, because it's a triplicate and you want one set for yourself, 4 sets, 40 pages. He's not willing to put a full signature. But that is a non-negotiable, right? Because it is going to come back with a defect if it is only initial. So next point is, what if you file what if it is a defective filing? What if there is no appeal? Or what if it has not been signed on all pages? What if some order is missing? You get a defect notice from the tribunal to the same email ID that was given in the time of filing, saying these are the defects, please cure it. And it gives you 10 days for curing the defect. It has to be cured within that time. So impugned order has to be given. In the case of, say, a 147 or a penalty order, also enclose the 143 orders, right, the base orders. In the case of a 263 order also, although the impugned order is 263 order, you may want to give the 143. And also your grounds of appeal or objections before the lower authorities, or the immediate appellate authority below, you will have to annex copies of those. What are the appeal fees like? Similar to what it was for the first appellate authority. If it's 1000 or less, it's 500. 1000 to 2000 is 1500. If it is more than 2000, it is 1% of the assessed income, subject to a maximum of 10,000. So most cases it comes to 10,000 if it is beyond a certain limit. If it relates to any other matter, it has to be 500 rupees. Then how do you make payment of this, right? You have to go on to the IT department portal, say ePay tax, choose minor hit 300, and under that others is, because many a time we see people making payment under the head tax, and then you get a defect notice saying appeal fee not paid, right? Then you have to repay if you pay it as tax, it's not accepted. You have to repay that 10,000 under others head. That's when your appeal fee gets accepted. So very important to keep in mind that you have to pay it under the others head. Then you have e-filing. It is mandatory for the revenue to file all their appeals electronically. It's not mandatory for SSEs except in the Delhi bench of the tribunal, and you don't understand. Here we have an option to either e-file it or physically file it, but if you e-file it, you have to follow up with the physical file. If you want to save limitation, say today is the last date and you get the appeal papers just now, you may want to do an e-filing immediately to save limitation, follow up with the physical filing. Then the website for filing is the IT80 website, which is it80.gov.in/e-filing. You have to log in and you have to register yourself. Who am I? You have to choose your PAN number. You will get an OTP, and then you can do the filing. Your form 36. I just also briefly discussed what all goes with it, so I am not covering that again. Filing of paper book. This is something that is unique only to the tribunal. You don't have this before the first appellate authority. This is basically a compilation of all the notices, submissions that were there before the lower authorities. Right? It has to be sequentially arranged, paginated. Typically, we don't start it from page number 1. If your appeal ended at page number 248, your paper book starts from 249. That is an accepted practice. Although it is not, there is nowhere written, it's not anywhere written that you have to start from this, but that's how it is practiced. It has to be arranged chronologically for ease of reference, indexed properly. And one important thing is, when your submission has annexures, say 10 annexures, please call it out in the index. And please put the page number for each annexure to a submission. Let's say your submission runs from page 100 to 200. Your first 10 pages are your submissions, 10 to 20 is annexure A, 20 to 30 is annexure B. Please call it out in the index, because we see a number of times where the index only says submissions dated so and so in response to notice dated so and so, pages 100 to 200. Then you are left hunting and hunting for those annexures that are caught in between those submissions. So make it easy for your own self when you are having to argue a matter. And then one other thing is, please avoid repeating documents. For instance, you have produced a notice dated 143.2 or 142.1 that calls for certain documents or the submissions. Then in your submission, you say
I have received a notice dated so and so from you in response to which I am writing. That notice is annexed as Annexure 1. So you have saved all of that on your system. You have scanned all of your submissions and you have kept it. And when you have to file a paper book, you just hit print, right? So your paper book will have serial number 1, notice dated so and so. Submission to that notice, again that annexure will come and sit. It's very, very annoying for a tribunal member when annexures are repeated. Same thing with computation of income. Your basic documents are given in response to the first notice that you receive. And subsequently you may be giving it to reconcile something or to give some submissions or to rely on something, and it is getting repeated. Those annexures are getting repeated. Or you are saying, I had made a submission dated so and so in response to this query. For your ease of reference, I am reattaching that. Again, you are putting it with that submission. So it's just bulking up the entire thing. Don't avoid doing that. Legible copies to be filed. Sometimes we are giving invoices which we have taken on a camera on your phone. Our clients send us, when we ask for proof of something, they say this is our invoice, we send a photo. And we just put it in the paper book. Not acceptable. Because it's not clear, it's not legible. If we don't have any option, let's at least try and do a typed copy. Right? And in the paper book, you have to affix true copy on every page. One important thing, in the paper book, you cannot file any additional evidence. If you want to file an additional evidence, it has to be by way of a separate application asking leave of the tribunal to permit you to file additional evidence. What goes into your paper book is only what is already filed. You also have to give a certification in the index saying what I am giving here is true copies of whatever was there before the lower authorities, and that it is was part of the record that was there before the lower authorities. So when you are making that certification, you can't include anything additional. 2 copies to be given. Okay, I was on true copy C to be affixed on each page. One question that we are normally asked is, can we do a double-sided printing? Right? It is. I mean, there is nothing that says you do a single-sided printing. I personally do prefer to do a double-sided printing just to save paper, but you are free to do a single-sided printing as well. But what is important is your true copy seen on every page. So there are paper books that we are filing, especially in TP matters, when you file everything, it goes into thousands and thousands of pages. So it is a burden, but that is a non-negotiable from the tribunal's end. They do not accept paper books if there is no true copy seen on every page. So that's something that we want to keep in mind.
A4 or A2?
A4 is fine. Really, I mean, if you have to include an A3 page for some reference or something, you can add it, but A4 is generally what is. Number of copies is 2 for the tribunal, 1 for the DR. Please ensure that the DR copy is served. Most of the time they come back and say my copy was not served. So in the tribunal there is a separate DR's office. So whatever you are filing in the tribunal, you have to go down to the ground floor, ask for the DR's office, file a copy separately with the DR. To be filed at least 1 week in advance on the departmental representative, because they need time to prepare, and at least 1 day in advance to the tribunal because it is removed the file. Additional grounds and additional evidence, like I was saying, additional evidence, tribunal is the last fact-finding authority, so you have the option of finding additional evidence, and this is your last fact-finding authority. So whatever evidence you have, it is very, very important that you collate it and give it before the tribunal, because thereafter there is no option, all your doors are closed. Additional grounds can be raised. Whatever is not raised in the memorandum of appeal, you can, with the leave of the tribunal, raise. Typically, sometimes, standard example is a ding ground, right? Up until Brandix developed and all that, most of us did not even take a ground on a DRP objections without ding is invalid. We did not take that ground. But when law started developing, you get ideas and you want to include it, you can do it. And especially when it is a legal ground, you are permitted to do it. Only thing, you have to make an application. NTPC is the standard decision that we quote, where the Supreme Court said that the powers of the tribunal are unfettered. Last fact-finding authority, you can raise any ground you want. Of course, there were a couple of decisions that try to disagree, but I think largely, some of the contrary decisions said only if that issue is arising out of your return. If it's a claim that you made in a return, can you raise a ground on that? But it has largely been watered down today to almost say that, especially with the Wipro judgment of the Karnataka High Court saying that if something is due to an SSE rightfully, you cannot deny it. Right? You can't expect a revised return to be filed, time is over, but that doesn't matter. Appellate authorities' powers are very, very wide, so you can raise a ground for the first time. Additional evidence also, the rules in the tribunal rules, they say that you should explain as or make out a sufficient cause as to why it was not produced earlier. Right? So I was not able to collect it is not a good enough time, good enough reason. But if the assessing authority gave you a notice on 29th of March, asked you to submit the documents by 31st of March, that you did not have sufficient time to collect. In that case, it becomes a strong reason, and ITAT can allow it for reasons to be recorded. Hearing you will get a notice fixing the date of hearing, and this is a typical thing that first always the appellant is heard, then the respondent is heard, and then the appellant gets a right of reply. One thing is if the appeal, if the assessee or if the appellant or the respondent is unrepresented, then the tribunal can go on to hear the appeal and dispose it off, but not for non-prosecution, but on merits. So they have to go into the merits, examine the issue themselves, and pass an order on merits. They cannot say appeal dismissed for non-prosecution. But of course, if there is sufficient cause for non-appearance, the ITAT may set aside if you make an application. Important thing, continuation of proceedings after death or insolvency, revised Form 36 has to be filed. Okay? So if there is a death and an LR has to come on record, you have to file a revised Form 36. Orders of the tribunal, generally 4 years, like I said, that's come down drastically. Order, once it's pronounced in open court. So if typically on a Friday they list out all the matters that are there for pronouncement, and they make up. So when you argued a matter, it is not pronounced immediately. Although they may give you an indication of what they want to do, but it's not pronounced. It is reserved for judgment, and it is pronounced on a separate day. Whatever, whether the appeal is allowed, partly allowed, dismissed, that is pronounced in open court, and a copy of the order is sent to both the SSE and the department. You can also, if as an authorized representative, you can go to the registry, say I am going to collect the order by hand. That option is there. You have to sign on the order and say I have collected this on behalf of the SSE. But otherwise, it has to be sent by post. And one important thing is, if you are handling an appeal at the ITAT level, please apply for a communication certificate when you collected, after you collected, or after you received the order, because it helps you in filing an, if you have to go and file an appeal for the High Court, for computation of your limitation, the date of communication that is indicated in the communication certificate is what is counted. So typically what happens, it is sent by post, right? So let's say order is dated 1st and it is put in post on 2nd, but I received the order only on 6th. And I assume that I received the order on 6th, I compute my 120 days accordingly, right? But when the communication certificate comes, it will say that the order dated so and so was dispatched by post on 2nd June. So you've lost your 4 days. So you have to be prepared, to let go of those 4 days. So immediately apply for a communication certificate, see what date is mentioned there, and compute your 120 days from the date that is mentioned in there. Then rectification of orders. The tribunal has powers to correct its errors. Limitation is 6 months. Obviously from the date of receipt of order, although 254(2) said that from the date of the order, or from the end of the month in which the order was passed is the language used. But the courts have interpreted them to mean it has to be obviously from the end of the month in which the order is received. Small fee of 50 rupees. One important thing that I want to say here is your power of rectification is not power of review. What is rectification is very different from what is a review. Let's take an example. If there is an arithmetical error, clerical error, typographical error, it's a no-brainer. It's an error apparent. Okay? But suppose there is a document in your paper book which you did not refer at the time of hearing. Order comes out against you, and you see that had that document been pointed out to the tribunal, the order could have gone the other way. can you maintain a miscellaneous application? Answer is no. Because the law is very clear that what has to be taken note of by the tribunal is what you point out to them, right? And if you have not pointed out, there is no error from the tribunal side. So you cannot blame the tribunal and the tribunal can't review, right? But suppose you refer to a case law at the time of hearing, which is noted down. The members have a log book, right? They note down all your arguments. And you refer to a certain case law, a copy of which you were not able to carry that day. And you know for a fact that it was noted down in the log book. And at the time when the order comes, you see that that case law is not referred to. Can you file a miscellaneous application? Yes, because you did refer to that case law, but it has not been taken note of, right? So things like this, you can't have review of your orders. Again, application to be filed in triplicate has to be passed. Your MA goes before, it's called an MA, miscellaneous application is registered as an MA. It goes before the same bench that heard the matter, right? So typically we have 3 benches. For example, in the Bangalore bench, we have an A bench, B bench and a C bench. And you have 3 judicial members and 3 accountant members. On a given day, it can be any permutation and combination. Your A bench can be Mr. X and Mr. Y in the first week, and it can be Z and P in the next week. So your benches are not fixed. Your matter is assigned to a certain bench. When you file an appeal, when you get your first notice, let's say you get a notice saying your appeal is assigned to A bench. Your appeal sticks to A bench no matter what, right? But the members who constitute the bench for the given week keep changing. And your MA goes before the very combination which heard your matter. Suppose at the time of filing an MA, somebody else is sitting in A bench. That's not the bench that's going to hear your matter. The combination which heard your matter is what is who will hear your MA again. What happens if a member retires? Then they will have somebody else substitute. But otherwise, this is. Powers of ITAT, like I said, last fact-finding authority and additional claims we've discussed. Power of remand and enhancement is something that we have to keep in mind. When we file additional evidence, we have to prepare clients to tell them that, listen, we are giving this for the first time before the tribunal, so there is a possibility of the matter going back to the assessing authority. They have the power of remand, but there are also instances where remand should not be very easily, that's not a jurisdiction that you easily give. Suppose, for instance, there was a matter where I was arguing that a company has completely controlled transactions. A comparable which was chosen in my case had 100% controlled transaction or related party transaction. My argument was that it is a controlled transaction, you cannot take it as a comparable in my case. DRP did not adjudicate on that comparable. When I came to the tribunal, my argument was that this is a legal point. The initial reaction always is, okay, DRP has not looked at it, so we send it back. Let them give their view of the matter. But the point is, it takes no more than 2 minutes for you to see whether it's a controlled transaction or an uncontrolled transaction, because you have the annual report before you, and the entire thing is reflected in the related party transactions there. So at these kinds of situations, you will have to make an effort to convince the tribunal that this is not a matter that is worth the remand. Although, DRP did not look into the facts. Of course, it's not really the fault of the SSE, but that's something we have to bear in mind. Enhancement. Typically, tribunal does not have the power of enhancement, but there is an off Karnataka High Court decision in the case of Fidelity, where the Karnataka High Court virtually said that the tribunal has the power of enhancement, which unfortunately was not taken to the Supreme Court. Today, being a jurisdictional High Court decision, holds the field. But my personal view on reading of 253 is, it says you can pass orders thereon. Right? Thereon was interpreted to mean that it can be anything in the appeal, including enhancement, but that's clearly not a power, because that power is specifically there for the first appellate authority, not for the tribunal. Stay of the demand is another important thing. When Ishita was mentioning that 226, you make an application for stay for the assessing officer, it gets rejected, what do? You can file a stay application before the ITAT only if your appeal is pending before the ITAT. So if your appeal is pending before the Commissioner Appeals, you can't file a stay application before the ITAT, right? So again, there's an application appendix that is given. You have to give reasons for seeking stay. Your earlier applications that were made before the lower authorities, etc., the details have to be given. It's not necessary that you have to make an application before the assessing authority before you come to the tribunal, right? Let's say you have a case where you got a final assessment order, demand has just been raised, and you come to the tribunal filing an appeal. You don't have to make a stay application necessarily before the AO, before you file a stay application for the tribunal. Right. What are the factors that are to be considered? 3 things: prima facie case, balance of convenience, and irreparable loss. These are the 3 things that are always kept in mind. Your prima facie case, you may cover, if it's covered in your own case, or if it's covered by another jurisdictional high court decision. That gives you a prima facie case as to why demand should not be collected. Balance of convenience. Suppose you have some refunds due from the department. Balance of convenience is with the department. They have some money of yours lying. Irreparable loss is not something that we really see in tax matters. It is typically in your land disputes and property disputes. Who has a loss that is irreparable is something that is seen. In a tax dispute, typically we don't go into this. Financial hardship is not relevant. This is one of the important things, because somewhere in the middle, the constant questions that we were asked by the members of the tribunal is, what is your hardship? What is the financial hardship? That is not an answer that is really required, because UTI Mutuals, Bombay High Court, and it has been a settled position that financial hardship is not a consideration. It is only these 3: prima facie case and balance of convenience. Then your stay is in force for a period of 180 days. You can have an extension for another 180 days. There is a proviso which says, despite all of this, if your appeal is not disposed of within 365 days, your stay stands abated. Right? So, for no fault of yours, if the department is taking time, the other side is taking time, no fault of yours, appeal is pending, but the stay gets vacated. That's where the Delhi High Court said, to that extent, the proviso is unconstitutional. If the delay is not attributable to the SSE, extension of stay can be granted beyond a period of 365 days. So, now typically, even beyond 365 days, we are seeing extensions of stay being granted by the tribunal. What are the conditions of stay? One important point here is, the provision says that you have to deposit not less than 20% of the amount of tax, interest, fee, penalty, or any other sum payable under the provisions of the Act, or furnishes security of an equal amount. So typically when you appear for a stay application to the tribunal, the question asked is, are you willing to deposit 20%? Right? One thing is, of course, it is not just deposit of 20%, the law also gives the discretion for furnishing a security. Right? You can give a bank guarantee, for instance. But practically, tribunal members are not agreeing with this. That is something that we will have to be aware of. Of course, in the case of Xiaomi, where their entire bank accounts were attached by the ED, the tribunal said, you have sufficient security with you. The department has sufficient security with you, so we are not going to insist on any further payment. Right? Then, how do you compute 20% of the tax, interest and penalty? We always see this problem where the department insists that it has to be 20% of the demand. So you have paid at the time of, let's say, your assessed income is 100, your tax is 30, right? You have an advance tax of say 5, you have say TDS of 5, right? So your notice of demand comes for 20. If 20% of your 20, you have to pay 4, right? But if it is 20% of 30, it is 6, but you already paid it by way of advance tax and your TDS. So the language used is very clear. It is 20% of tax, interest and penalty, which is your 30. You have to compute your 20% on the 30, not on the 20. Not what comes in the notice of demand, but what is the tax and interest that is finally computed in your computation sheet. Dress regulations, very, very, very important. Always wear a blazer. there is a dress regulation that is under the rules itself which says suit for men with a buttoned up coat over a pant or a chudidar pajama. For a woman it is a black coat over a sober colored sari. But in the case of authorized representatives belonging to other professions like lawyers or chartered accountants, they may appear in the attire prescribed for them to appear in a professional capacity, which I am assuming is a suit for chartered accountants or a sari or whatever is common. Right? But it is very, very important that you are neatly dressed and you are formally dressed. Appeal to High Court, I will not spend too much time on this because we are already running out of time and I really want to cover what is the art that is there. Quickly, 120 days to file an appeal to the High Court, and what you can file an appeal on is only a substantial question of law, no question of fact. Right? Very, very, very important. We have to remember this. There are instances when a question of fact can also become a question of law. That is when your evidence has not been appreciated in the right perspective by the tribunal. Suppose you gave some evidence, but that was not looked into. That is a question of law. Okay? Let's see some examples quickly of what can be a question of law and what is not a question of law. For instance, whether the tribunal was correct in holding that the interest income is not eligible for deduction under section 10A of the Act, yes, it is very, very clearly a question of law. Right? There is no fact finding necessary. Whether the tribunal was correct in holding that the appellant did not make payment of a sum of rupees so and so to Mr. Y, that is a question of fact. Tribunal has found as a question of fact that you did not make the payment to him. That is a fact finding. You cannot question that before the High Court. This example will be important to understand how to convert a question of fact into a question of law. Whether import from an unrelated party is an international transaction under section chapter 10 of the Act is clearly a question of law. Whether the tribunal was correct in holding that a company was a related party during the assessment year in question becomes a question of fact, therefore you can't raise it before the court. But look at this. Whether the finding of the tribunal that X company was a related party, although at the time of the transaction the appellant did not hold any shares in X company, is contrary to the material on record and therefore perverse, that becomes a question. So sometimes when we have no other go but have to approach the High Court, we have to look at ways of how to convert a question of fact into a question of law. I mean, I'm just loosely using the term converting, but we have to bear in mind that evidences have to be looked at properly. Hearing of an appeal is at two stages, admission and final hearing. At an admission stage, the High Court only decides whether prima facie there is a case made out. If it's a covered issue, High Court will not admit it. If it's a issue covered against you, if it's an issue covered in your favor, High Court tends to dispose of the appeal itself at that stage. Minimum of 2 judges comprising of a division, it's a division bench which hears appeals in the High Court. Minimum of 2 judges, but typically it's always been 2 judges. Then you have appeals to the Supreme Court. 261 of the Income Tax Act provides for an appeal to the High Court provided there is a reference from the High Court. So we don't see too many 261 appeals before the High Court or Supreme Court being filed. Typically everybody goes under 136 of the Constitution, which is a very wide power given to the Supreme Court under the Constitution to say you can file, the Supreme Court can look into any order, judgment passed anywhere in the country. So that is where we really file our petitions to the Supreme Court. I don't want to go into what is the effect of an SLP dismissal versus a civil appeal dismissal. I think we can skip that for the moment. Practical issues, most of this we've covered between Ishita and me. Order not communicated to the SSE, delay in disposal of appeal by the CITA. This we have been seeing for some time now that after the faceless assessment, appeals have been pending for quite some time. The only way to go about it is to file a writ petition to the High Court and say my appeal is pending. Please direct expeditious disposal. Now, this is what I really wanted to cover. Right? Research, strategy, representation, and introspection. What does your research have to have? It has to, first you have to research before representing any matter. You research into one, the law, the facts, and the current trends. Right? Your law can be your provisions, your case laws, but it has to be both for and against. When you're researching, it's very important not just to note down decisions that are favorable to us, but also to note down decisions that are against us to see how we have to overcome those decisions. Don't rely on head notes. Very, very, very problematic. As law students, as a student, the first thing that we are taught is, don't read the head note to me. Tell me what each paragraph of that judgment says, because one, on facts, it can be completely different, it can go against you. Because some observation somewhere in which will apply to your facts may be against you. Two, head notes can be very, very misleading, right? It may be applicable to your facts, but what is ultimately said in that paragraph of the judgment may be completely different. So don't go by head notes. And even in the tribunal or wherever, if you are reading out a judgment, please read out the relevant case laws. Relevant paragraphs. Don't read the head note. Facts. You have to be aware of your facts. One important thing at the time of representation, you may want to check with your client is what has happened in the subsequent years and the previous years on the same issue. Right? Typically, those disallowances are there continuing throughout the years. Sometimes your earlier assessment years, you have probably succeeded before the tribunal. You have not got that information from the client. It will be very important for you here. Or ITAT has remanded the matter back to the assessing officer. On remand, assessing officer has given you the relief. So you just have to point out to the tribunal tomorrow that in the previous assessment year, assessing officer himself has accepted this. So it's very important to do research of what has happened in your own case. Then current trends. Keeping abreast of current trends. By trends, I don't mean just knowing what the law says or the case law says. What is the trend of the tribunal, right? For instance, we know typically that this is what is being done in demonetization cases. This is what is being done in ATP cases. This is what the tribunal is doing in ex parte matters, sending it back at the first hearing itself. So these are, important research ideas that you have to keep in mind. Then, typically, what do I do for this research, right? I of course, Bangalore Tribunal is something that I appear day in and day out, so I know which member is reacting which way to a certain proposition. But suppose you have to go to a new bench where you don't know the members, you don't know the judge. How do you do your research? Now today we have a very, very good facility of VC everywhere. You can log into any high court, any tribunal bench, watch what that bench is doing, get a sense of how the bench is reacting, what the judge likes, what points are being appreciated, what is not being appreciated. That is one way of doing your research. The other way of doing your research is asking from people who are regularly appearing in those forums. How does this person react? That is very, very important part of research. This is something that nobody tells, nobody ever discusses, but these are some pointers that I want to give. Then you've done your research. Next, you have to strategize. Right? You have to, for that, know your client. What does your client expect? We have aggressive clients, we have conservative clients, we have reasonable clients. We have to tell clients after our research, once we know where we stand, if we have a bad case, we have to tell client that this is the max you can expect from the tribunal. If we have a good case, we tell the client, I'm going to try for this best outcome. Know your judge, like I was saying, do a research of what the judge is like, what is his, what are his likes and dislikes. Knowing your opponent is equally important. Who is the person who is going to stand up to you tomorrow, right? What are the points that he's been typically arguing? We see a trend, like some person is very, very technical, like constantly pointing out that your ground does not cover this, your grounds are not concise, your ground does not, your written submissions were served to me just yesterday. Know your opponent. There are others who go deep into the matter only on merits, don't bother about the technical points. And then they have done their research very, very thoroughly, completely. And so when you've done your research of the cases that are against you, you know what is going to come up with tomorrow. Is he a person who's likely to find that decision? To that extent, you need to know your opponent. This of course comes with regular appearances against that person, but this is something that adds a lot of value to your representation. Then, so between research and strategy is really your intelligence playing, but between strategy and representation is where your wisdom comes in. How much to say, when to say. These are very, very important. Like, you may have 100 points to argue, but you know the judge is not going to be convinced by any of your technical arguments. Why do you want to waste your time? If you have a good case on merits, just go whole hog on your merits And that's going to be impressive for the tribunal members also, saving their time. But at the same time, you've not lost your case, right? So that is where your wisdom comes in. Important to be very calm, composed and respectful. Eloquence versus annoyance. Very easy to get annoyed and cause an annoyance, right? It's very easy for us to take things personally when an opponent is opposing us and saying things. And the instinct is to get up and fight, but it is more difficult to sit down and wait for your turn, right? So keep that in mind. Avoid repeated adjournments, right? Once we fight a case, of course, our duty to client also is to see that it is through as soon as possible, but it also puts off the members to see constant adjournments being taken, especially on the ground that the counsel is not available, right? They feel that what is more important to an advocate than being here in court. So it's important. Building trust happens over a period of time, and also by your demeanor in court. If there is a case, if for a previous assessment year, a decision has been rendered against you on the same circumstances, it is important for you to let the tribunal know that that decision is there. It is not proper to concede. That is how you build trust. Today, if I say something to the tribunal member, he should say, okay, if this person is saying something, I'm going to take it at face value. I don't want. If the question is asked as to, did the assessing officer ask you this question and you say yes, the tribunal has to believe you without even wanting to go to the paper book and asking you to say, show me where he asked you. That is the kind of trust that you have to build. Speaking when necessary. This is very important. We are always wanting to talk. Even when the tribunal is already with you, we want to make our submissions. Typically happens in a departmental appeal where the tribunal members are already saying we want to dismiss it, but we want to stand up and make our point. Not necessary, because that's going to land you in more problem. If the tribunal catches on to some point which they did not think of, you are unnecessarily putting yourself in trouble. Asking for help or briefing a counsel where you think that the matter is complicated for handling yourself. Always ask for help from somebody or brief a counsel. Right? This is something that people typically do, not something that is unheard of. When you are doing a VC hearing, ensure connectivity. At least in a tribunal, members do not like to hear long matters on VC. You may want to sit in your comfortable air-conditioned office and do a hearing because you think it is a matter that can be done on VC. They do not appreciate it. Let's be very practical on this. If you want to do a VC, if you are stuck somewhere, you have no other option, ensure that the connectivity is good. They don't like your video going off in the middle of arguments and all that. So bear that in mind. Always file written submission. I've seen that this is the single most important point that can turn your case in your favor, because whatever you put in the written submission is what ultimately they will read. Right? You may argue 100,000 points. When they are sitting on the bench, they are not really in the frame of mind to absorb everything. It's only when they go back, read the file completely along with the written submissions really, that they see what point is trying to be made. Then introspection. This is again very important. How did you do in your hearing today? Is a constant introspection that we are used to doing. At the end of the day, before sleeping, we always think, okay, this was what I argued. Probably I could have argued it this way, or this is an additional point which I missed out. Introspection is very important, but you also have to be very, very dispassionate. Don't put yourself into an assessee's shoes. You are only an advocate. You can't be emotionally involved with your client. If your claim is being held against you, you cannot beat yourself up for it. You are only an advocate. So be dispassionate. So once the order comes, just read through it completely. Don't read the last line which says appeal allowed and be happy with it. More often than not, there are going to be some mistakes that you may want to ask for rectification of. So as soon as an order comes, be sure to read through it fully, see all all the paragraphs, and if you have to advise client to do any next steps, advise them. Yeah, that's about it. Thank you. Hope I did not Any questions?
Chartered Accountant is not allowing referral before the High Court?
Because it's a judicial forum, it's a court. So your ITAT is not completely a judicial forum, it's a tribunal. And a tribunal always has a member who's an accountant member and a judicial member, it's not a court. So there a chartered accountant is permitted to appear. In the High Court it becomes completely judicial. And the High Court Act and the rules don't provide for it. Right? It's only an advocate who can appear in the High Court and so.
There's an announcement on the event which is coming up, which is called Startup Sphere. It's a conference which is for the startups. I mean, bringing all the entire ecosystem of the startups under one roof. So today is the last day for availing the early bird offer. So please register and participate. Going to be one of the flagship events of Bangalore branch, and a large number of participants are expected, where you will have all the from the government and the investors to all the professionals who are involved. So please do register. With that, we are coming to the end of the session. So I thank Tanmay for coming all the way from there despite your busy schedule and sharing your knowledge with our members. Thank you so much on behalf of Bangalore branch. I want to hand over a memento. I request our chairman to hand over a memento to her. Thank you so much, and thank you to all the members for participating. I hope this was helpful. We will be doing a sequel of this in GST, which is again was based on the request from the members. We'll be soon announcing about the details and the details of the workshop. So, thank you.